prevail. We must end this uncivil war that pits red against blue, rural versus urban, conservative versus liberal. We can do this. Thank you, America.
The history made it yesterday. We welcome all of you to Bloomberg Surveillance from London and from New York. Much to talk about here, and we are now thrilled to bring you on any number of topics. Kenneth Rogoff of Harvard, his service to us in Davos. You know, this is the Davos visit, I guess, this year. Ken Rogoff as well. Ken, you have written over the years on our fiscal responsibility. How out of whack is our fiscal economics as we enter a new presidency?
Well, we're in a wartime situation, and in a situation like this, you do whatever it takes, and you figure out how to pay for it later. I think the thing that's probably most out of whack is we probably need a more robust system of taxes and transfers to deal with inequality. But in the short term, there's really very little alternative to continuing these deficits as long as the markets will permit it.
Well, as long as the markets will permit it, Joe Stiglitz to join us later today. I remember a conversation, Ken, with Professor Stiglitz in Davos, where you were in agreement on an optimism to grow our way out of our fiscal difficulties. Are we going to be able to do that with the new potential GDP of America?
No, I mean, I think that's not the point at the moment. The pandemic is not over. This is the worst crisis I've seen in my lifetime, I think, since the Great Depression. This is worse than the financial crisis. And we have to try to have a robust plan for dealing with it. And this is catastrophe relief. This isn't, stimulus yet. I think we have to get there with infrastructure spending and such. And President Biden has a lot of ideas about that. What is true is, as we emerge from the wartime economy, whenever that is, you can't stay permanently on wartime footing. You can't solve every social problem, the environment, everything simply by running deficits. At some point, you have to make choices among policies about what you want to do and what you don't want to do. You probably, as I said, to deal with inequality, need a more robust system of taxes, transfers, providing more government services. And I think that's going to be a tough road, but that's really the direction we need to go.
So do you think that Joe Biden will look at it? And, again, what does it mean for him being able to actually push it through?
Who knows? I mean, I'm just relieved that we have a president who comports himself with dignity. Yes, Trump was not wrong about everything, but I think really the real issue was the threat to the Constitution, the institutions, international institutions. It's sometimes good to have somebody who comes and breaks things up and shakes things up, but it had gone much too far, and Biden is so level-headed. I thought it was actually a very inspirational speech that he gave yesterday, highlighting at those issues. That's the most important thing the president can do. And I think if you don't have a good system of governance, you will not grow. You were talking about Italy earlier. I mean, Italy certainly struggled with trying to balance all these competing interests, and it's one of the reasons its growth performance hasn't been so great certainly in recent decades.
But Professor, when you look at the spending, where does that spending need to go in the U.S.? Is it infrastructure spending? Is it actually internet, infrastructure spending to make sure that people have access to the World Wide Web, especially for education? How should the U.S. spend that money?
Well, I mean, again, the pandemic is the first thing. The Gates Foundation's done an estimate. It seems much too low to me, that it would cost $25 billion to do international distribution of the vaccines. Suppose it's $200 billion. That from the Europe and the United States would be money very well spent to try to tame this thing. But yes, I mean, infrastructure spending, if it's genuinely productive, is spectacularly useful. And I think you're right, a broader notion of education. I think the future is not just bricks and mortar education,
Right.
but online education for children and adults.
Ken, you know, I've said Your Curse of Cash is the bravest book written on economics in a generation. Clearly, Christine Lagarde has read The Curse of Cash. Do you link Bitcoin wholly into criminal activity? And do you consider the new price appreciation of Bitcoin to be speculative?
Well, I certainly think I agree that it's speculative. I've been a Bitcoin skeptic, and certainly the price has gone up, but there's sort of an ultimate question of what's the use. Is it just valuable because people think it's valuable? That is a bubble that would blow up. I can see Bitcoin being used in failed states. It's conceivable, you know, it could have some use in a dystopian future. But I think the governments are not going to allow pseudonymous transactions on a big scale. They're just not going to allow it. The regulation will come in. The government will win. It doesn't matter what the technology is. And so I think, you know, over the long run, if there's not a use, yes, the bubble will burst. I hope there's not such a valuable use, but I suppose it's a hedge against dystopia.
Would you advise Secretary Yellen at Treasury that the U.S. should be proactive in instituting that regulation, which could collapse the price of cryptocurrency?
Well, they are, yeah, yes. I mean, that's just true across the board. It needs to be regulated. Some of the perhaps stable coins will, you know, make it through this. But I think, of course, every central bank's working on this. I'm in the G30. We did a report on this. So, you know, I wouldn't say it so crudely as just to say, make the price go down. That's not the purpose. But, you know, you need to have the transactions obey the same kinds of information regulations as everything else. So I think governments are on it. It's not being used that widely, and I suspect, although the Bitcoin lobbyists have been successful in getting it in some places, that won't last.
Ken Rogoff, talk to me about how we can strengthen the financial system from now. I know the G30 has also done quite a lot of work on, you know, worrying about solvency, maybe worrying about zombie companies. Are we in a better place now that we thought we would pre-pandemic?
Well, as this lingers, I think some of our defenses will weaken. I mean, part of what we did in round one very effectively was the Federal Reserve basically said, I'm going to guarantee junk bonds. I'm being just a little bit exaggerating, but they, you know, did virtually go to that. Municipals, they ended up not having to buy very much. The market responded. But I think as things go on, there will be bankruptcies, there will be things, and the Treasury is going to step in some places. The Federal Reserve is not in a position to lose lots of money. And we could see quite a lot of financial strains as this goes on. That said, a lot of the problems are really, you know, among low-income, small businesses, and they're terrible for the country. They don't necessarily bring down the system quite the way that, you know, a full-on banking crisis does. But of course, if people can't pay their rent and they're not paying their rent, eventually you're going to have real estate bankruptcies, et cetera, et cetera.
Is there anything that could be systemic?
I mean, of course, in this situation, when you have a shock of this magnitude, there's no telling what direction that's going to move things. I think as long as interest rates stay this low, the government has sort of a lot of power to deal with things. If at some point, for example, Asia grew much faster for a sustained period and Europe and the United States didn't, then I think eventually that's going to put a lot of stresses on things and interest rates will pick up. And, you know, interest rates are below long-term trend, even if long-term trend is declining. We've had declines like this before. they're at least substantially reversed eventually over a long time. That's going to happen.
Ken Rogoff, thank you so much for joining us this day after inauguration. He is at Harvard, and I can't say enough about his effort. The curse of cash, still very timely. With our first word news in New York City, here's Karina Mitchell.
Tom, thank you. President Biden plans to issue a set of executive orders today aimed at fighting the coronavirus. Those orders will reverse or refashion many of former President Trump's most criticized policies. The president will overhaul and unify the approach to virus testing and use federal powers to stabilize the supply chain for critical medical supplies. He'll also boost the government's ability to provide rapid and fair vaccine distribution. Meanwhile, the UK has suffered its worst day yet in the pandemic. More than 1,800 deaths were recorded over 24 hours. And Prime Minister Boris Johnson's science advisor warned that some hospitals look like war zones. Almost 40,000 coronavirus patients are being treated in British hospitals. Avril Haines will be the first woman to oversee America's spies. Haines also became the first member of President Biden's cabinet to win Senate approval. The 84-10 vote for confirmation came just hours after the president was sworn in. As Director of National Intelligence, Haines would oversee 18 intelligence agencies. And the Bank of Japan is leaving its main policy unchanged. The central bank forecasts that the economy will regain more lost growth than previously thought once the current state of emergency is over. BOJ policymakers kept its interest rate and asset buying program intact. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg Francine.
Corinne, thank you so much. Now, up next, we speak with Jason Farley, Johns Hopkins nursing professor, as we continue tracking COVID-19. We'll see also what the new Biden administration can put in place. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
President Biden will issue a directive later today, which will include the intent of the United States to join COVAX and support the ACT Accelerator. As a WHO member state, the United States will work constructively with partners to strengthen and, importantly, to reform the WHO.
The asymmetric nature of executive orders. One president can put out an executive order that, well, maybe gets done, maybe doesn't get done. And then there is the direction that we've seen in 24 hours, whether you agree or disagree, the action of President Biden seen there with Dr. Fauci. Joining us now on this horrific pandemic, Jason Farley in the trenches of Johns Hopkins and their nursing professor as well. Jason, we have become benumbed. We look at the Bloomberg virus tracker. We look at the Bloomberg vaccine tracker, and I think we've just lost perspective at 400,000 deaths. What's it like right now in our hospitals versus what it was like in June or in the shock of March?
Yeah, well, good morning. We're certainly in a wave upon a wave, as has been described. Many sites, particularly in rural areas, are at capacity. We're moving patients from ICUs to medical surgical wards before they can really be fully recovered. We're moving them out of the hospital to home-based care models, again, before they have fully rehabbed. It's a dire situation in many facilities across the country.
Good morning also from London, Jason. When do you expect to start seeing the implications of vaccinations? I was speaking to one of our experts, Sam Fazeli, and he was saying, this is the critical issue is, okay, you're vaccinating. When do you start seeing the fruits of that?
Yeah, certainly we're going to have to get well beyond our, just over 16 million doses that have been administered in the United States. We're going to need to see greater vaccine penetration into the community. We're thinking about estimates of at least 50% of the population before some level of normalcy returns. We're really thinking that this, the 100 million doses in 100 days is a laudable goal. It would help us move toward some sense of normalcy much faster. But it's an uphill battle, not only for the supplies, the vaccine availability, but also, public hesitancy against the vaccine.
So what kind of roadmap are you looking at, like when we get to that critical amount of people being vaccinated? Do you see it first on, cases? Is it hospitalizations? Like when do we start, thinking this is a success?
Well, we have to remember that the two current vaccines that we have are required either 3 weeks in the case of the Moderna vaccine or 4 weeks in the case of the Pfizer vaccine. Actually, it's just a reverse of that, 3 weeks in Pfizer, 4 weeks in Moderna. But with each of those vaccines, and you get your second dose, it takes an additional 14 days to receive, a high enough level of antibody to provide full protection. So we have to remember a single shot doesn't get us out of the woods. It's that second shot, and then several weeks after that. So if we're thinking about getting 100 million doses in 100 days and that number of people immunized, we really have to think that each individual needs 2 injections, and we should begin to see reduced transmission in the community, we hope. And certainly if people are, as the number of people protected around a community increases, the number of people infected and the transmission rate should begin to fall. In terms of the modeling timelines for that perspective, it's all going to be dependent on the speed in which we roll out the vaccines, and thus the focus on trying to get those shots in the arms as quickly as possible.
Here in the UK, they're giving the Pfizer vaccine 10 to 12 weeks after the first dose, or at least the second dose after the first dose. Is that something that the US should be thinking about?
I think that really, the trials looked at giving the vaccine for the Pfizer, which today I get my second dose of that vaccination, is really designed for 3 weeks. We do not expect that if you get it a little later that it's going to result in much of a difference in efficacy. We'll know that data arising from the UK. The reason for doing that is to spread out production, right, and to get more people in the first dose, which we do know will have some level of benefit, particularly and potentially benefiting reduced morbidity and hopefully along with that mortality. But I would say that right now our strategy has been to follow the way the clinical trials were implemented. Certainly expanding that window would increase the number of doses available on hand immediately.
Do we know, Jason, after the first dose, how much antibodies you actually have, if you have antibodies?
Well, we do know that people after 2 weeks begin to show levels of antibody. The question of protective levels of antibody remains to be seen. Each individual will be somewhat different. We know antibody production begins, but we also know then the studies between dose 1 and dose 2, a number of individuals in both of the studies for Moderna and Pfizer did actually become infected in that interval. So we know that while antibodies are increasing, they may not be yet protective levels of antibodies, and thus necessitating that second dose of the vaccine to get that booster response to push our immune system into a level of protection that will ultimately lead to the prevention of disease.
Jason, are we 2 months away from really knowing whether these vaccines are as effective as we think, also against new variants?
Yeah, I mean, the studies are ongoing from the UK variant to the South Africa variant, and I think what's most concerning is the data that is emerging out of Brazil. There have been several modeling evaluations of the variants in Brazil in particular, and there's a single nucleotide variant within that strain in Brazil that has been shown to escape neutralizing antibodies. And those are basically the antibodies produced by the vaccine. And there have been about 180 cases from Rio. About 60% of them were from Rio and the surrounding areas in Brazil. And the basic premise here is that when we looked at them in the lab, they do seem to have a potential mechanism to escape the antibodies. Now, whether or not that is going to be something that becomes widespread, whether or not those are small, unique cases, we expect evolution in viruses, particularly when they're this widespread. The question and the hope is that we can contain that and it prevents it from becoming something that is a larger concern outside of the area of Rio and the surrounding areas in Brazil.
Jason, thank you so much for the update. Jason Farley there of Johns Hopkins. And be sure, of course, to check out VRUS. Go on to Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up, New York Presbyterian Hospital Chief Executive Dr. Stephen Corwin. That's at 10:30 a.m. in New York, 3:30 p.m. in London for an inside look at what it looks like in hospitals right now. This is Bloomberg.
Let's crush this round. And by reading your heart rate, she knows exactly how hard you're working.
Just really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. United Airlines is mapping out a recovery plan from last year's record loss. The goal is to top pre-pandemic profit margins in 2023. United says this year will serve as a transition after the collapse in travel demand due to the coronavirus. United says it's more than halfway to finding $2 billion in cost cuts. And Alcoa's warning that higher costs may weigh on its earnings this quarter. That's holding down optimism from better than expected results at the end of 2020. Alcoa is forecasting rising costs in its alumina business and lower selling prices of bauxite. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Karina. Now, more Bloomberg Surveillance ahead. Of course, they'll have a full roundup of what we saw in the inauguration yesterday of Joe Biden, and then there'll be a lot more on the markets. The ECB also a little bit later. More Bloomberg Surveillance simulcast on radio and TV is next.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
for the first time in a very long time of more people falling back into poverty.
We don't see any inflation pressures here. We're still living through a very disinflationary COVID shock.
All of the telltale signs of a structural bull market at play here.
This is going to be an excellent year for growth.
I still don't think we've seen the fullness of what his administration is going to do for the economy.
It's going to be enormous spending in this country. I think the boom is coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. With global equities at record highs, Tom Keene, Joe Biden beginning his first full day as the President of the United States.
It's not only that they were record highs, John, it's the way they did it. They did it without higher interest rates. I think that's a really telling idea. We've got the ECB this morning. I know Lisa's going to dive into all that, John, but the linkage there, it's not that stocks went up yesterday, John. It's the way they went up that was important.
Lisa's going to run us through the events that we need to keep our eye on through the next several hours, through the rest of today. Tom Keene, the event I've got my eye on, 11 a.m. Eastern time, a bow-tied Tom Keene goes down for his first vaccination.
With vet bill.
Yeah, vet bill's going to be there to, be my, my security dog and all that. But, we're getting in line at my fossil. I've had to wait because I'm so young. But, we're going to get out front and get the vaccine. And it's a really important idea here, John, and that worldwide the urgency is there. You heard it from Dr. Fauci, of course, yesterday and with the releases this morning. But, John, I'm sorry, it's sobering. Germany, record deaths. Mexico, a record death yesterday. Everybody's got to get out there and do it.
And Germany's got a lot to do on the vaccination front. We can talk about that a little bit later this hour, Lisa, with a focus on Europe in about 45 minutes.
Yeah, 7:45 a.m. We're going to be getting the ECB rate decision followed at 8:30 a.m. Eastern time with Christine Lagarde's press conference. Really interesting to see how the ECB can overwhelm a market that has already been overwhelmed with stimulus, one of the key issues for central banks globally. 8:30 a.m., what Joe Biden is walking into is an economy that is riddled with joblessness, riddled with a need for stimulus. We're going to be getting U.S. initial jobless claims, also continuing claims, which are expected to increase week over week to 5.3 million individuals receiving some of these jobless benefits. And 2 p.m., not only after Tom Keene will have gotten his shot after putting on his sport coat that is short sleeve with his vaccination bow tie, right. Joe Biden is going to be delivering remarks on the COVID plan. Really interesting to see how he plans to get 100 million inoculations out in the first 100 days. This is a tall feat, especially as the administration looks at what has currently been laid out and delivers and figures out that there are a number of flaws in some of the distribution networks. As we find out more information, that task, John, becomes that much more daunting.
Yeah, this administration ramping up the effort down in Washington straight away, hitting the ground running, those executive orders coming through and those new policies coming through this morning as well. We'll catch up with Emily Wilkins down in Washington, D.C. in about 15 minutes or so on this program live on Bloomberg TV and radio. Let's get to the price action this Thursday morning. It's just record high on the NASDAQ, record high on the S&P, record high on the Russell, all-time highs on global equities. For equity futures this morning, we inch higher. We add some weight to the S&P 500, up 12 points. Call it 11 on the S&P, up about 1/3%. To Tom's point, Treasuries are not really part of the move at all. Yields are up by what? Half a basis point to 1.085%. What is part of the move this morning, Tom, just quickly, is an FX, foreign exchange, dollar, weaker against the bulk of G10 once again. That dollar weakness is still there.
And some of it is an abrupt move. And I'd also point out, John, euro sterling. I know Francine was looking at that. You called that out yesterday as well. John, do you really think euro sterling across the channel in the North Sea is a vaccine trade?
I think at the moment, Tom, because what we've seen on the vaccination front in the UK relative to, say, the rest of Europe, Germany specifically, it's just removed the possibility, the small probability that we get negative interest rates over at the Bank of England. That vaccination effort in the UK just so much better than what we've seen in Germany. And Tom, just quickly, let me put some numbers on it. Germany is shooting for 300,000 vaccinations a day. They're at a fraction of that right now. Yesterday in the UK, they were running north of 300,000 a day. So the UK is already hitting its targets and running at a decent clip. Germany's nowhere near it. Angela Merkel, the Chancellor, came out this morning and said they'd like to hit every single German with a vaccine by September. At the current rate, Tom, they're going to struggle to get there.
Well, it's good. You know, these are the dynamics, and of course, we see it in New York City as well. I actually checked my, my fancy iPhone medical app here, John, yesterday to see if my appointment was canceled because there's serious issues in New York City as well.
About the doses and about how much is left behind, still to come. Tom, much more still to come on this program. We start this morning with Julian Emmanuel of BTIG. And Julian, with record highs across the board, I've been asked this question now for the last several months. I'll ask it of you. Do valuations matter here?
They do. Basically, when you go back in history, when you answer that question, no, that's when we run into trouble. And frankly, that is one of the bricks in the wall of worry, and we think it's a very legitimate brick that is continuing to fuel the move higher. There's still some buying power out there, particularly on the part of the investing public, who is really very deeply in love with short-dated call options.
Julian, what is the character, the nature of the flows right now? What is the distinction you see and what is triggering buys?
I never thought I'd expect to hear myself say this after, several decades in the business, but it really is this call buying frenzy that's triggering really when you have gap moves. You saw it yesterday in one of the FANG names, really incremental stock buying that's moving everything higher. Obviously, yesterday was also a function of, the general sense of relief. And I think you made a very important point that yields didn't move higher. That really is sort of a sign that we've seen, a number of weeks, really a number of months of money shifting away from the U.S. That stopped yesterday. Will that be continued? Hard to say.
All right. You said on the peripheries, these sort of marginal buyer, the call buyers. Are you talking about Robinhood here? Are you talking about the retail investor, that is what is setting the frenzy right now?
It is, and very much has been since shortly after the election. If you look at cash on the part of institutions, remains relatively low. People came into the new year rather fully invested, but the public still has money in reserve. And again, we're in this same situation, and you see it by virtue of the last couple of days of NASDAQ playing catch up to the value trade, is that there is this intense desire to participate in stocks and to speculate, again, in very short-dated call options, something we had not seen the last time the public was this enthused, which was, in our view, 1999 and 2000.
Julian, right now, this is not a political point, so forgive me for what I'm about to say if you do think it is a political point. Yesterday evening, I put on that news conference, that briefing over at the White House. I turned it off after about 15 minutes and felt like I'd missed nothing. I missed nothing. There's a new tone, and I know a lot of people get put in those nice little video reels of people saying there's a new tone down in Washington, but the tone is clearly going to shift down in Washington. What does that mean for market participants, at least in the short term, Julian?
Well, if you look at the short term, it means that we are uncomfortably more reliant on the course of policy than we have been, again, perhaps in years. And that goes back to your original question. At 28, 29 times trailing earnings, it really is an element of something that has to go right. And there's a lot of belief built in that it may not be 1.9 trillion that's going to get through in terms of stimulus, but certainly north of $1 trillion. And at the same time, that we're going to figure out a way to get 100 million shots into people's arms in the first 100 days. And those are very, very difficult. And policy is going to have a lot to do with whether those are successes in the first 100 days.
Julian Emmanuel, as we look at this market, it has to be underpinned by at least a vector of earnings growth, if not double-digit numbers. Can you frame good earnings numbers and then attendant share buyback and dividend increases to support the markets?
You can. You look at it. The projection for this year is north of 20%. We think if you have a reasonably smooth economic reopening, you're going to get that. Could you overshoot in terms of earnings? Absolutely, you could. There's this certainly pent-up desire to go out, to spend. That can drive earnings. And so for us, you're going to get dividend increases. You're going to get increased buybacks. You think about the financials, that's part of the narrative of their strength of the last several months, is that they're going to be able to do more of that. And we think broadly that entire theme will support the market higher towards the rest of the year.
Julia, great to catch up. I haven't seen you for a while. I haven't been here for a while, so Happy New Year as well. I'm allowed to do that at the back end of January. Julian,
John,
thank
he
you.
was on
Julian
4
Emmanuel,
times where you were on Capri. You're on Capri, and we're
I'm
talking
sure
to
he was.
Emmanuel on an
John,
every other day
you're
basis.
asking to be brought up with a sabbatical. Basically, you're giving Tom an opening, John.
Lisa, I'm so rested, I just don't care. Equity futures up 10 points.
Yeah, I
on the
noticed.
S&P
Tanned and
500.
rested. I got the
about
pasty thing going.
1%.
Lots of toast, too.
It's a record highs. Just quickly, before we have to run, I do think we have to focus on policy with Emily Wilkins down in Washington, D.C. in a moment. Senator Romney pushing back against that $1.9 trillion plan wasn't missed by many people in this market yesterday. Senator Manchin has already made his point on the Democrat side that he does not think that what he's hearing is targeted enough, Tom. And I just wonder how that comes together in the coming days and weeks.
Well, the difference is, John, they're going to have a conversation. And this goes back to the 5 a.m. presentations Bloomberg News is receiving from the Biden administration on COVID and the such. John, the process here is going to be traditional. Guess what? They're going to have a conversation. They're going to have lunch. Senator Romney's going to take a beverage or a dinner with the President of the United States, and they'll figure it out. And yeah, it comes down under $1.x trillion.
It feels boring again, doesn't it, Lisa? I know some people welcome that policy making might be boring down in Washington, D.C. again.
Well, now we can talk about some of the real issues, and that's, I think, going to be the real issue. How do you bridge the gap between the enthusiasm in stocks and the reality of the economy, John?
Very, very true. From New York City this morning, good morning to you all for our audience worldwide. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. President Biden plans to issue a set of executive orders today aimed at fighting the coronavirus. Those orders will reverse or refashion many of Donald Trump's most criticized policies. The president will overhaul and unify the approach to virus testing and use federal powers to stabilize the supply chain for critical medical supplies. He'll also boost the government's ability to provide rapid and fair vaccine distribution. Meanwhile, the Biden administration is mending fences with the World Health Organization. Infectious diseases chief Anthony Fauci pledges the country's commitment to the agency today on a video link. The U.S. will join COVAX, the WHO's multinational effort seeking to deploy coronavirus vaccines around the world. Donald Trump had said the U.S. would exit the WHO. And the U.K. has suffered its worst day yet in the pandemic. More than 1,800 deaths were recorded in a 24-hour period. Prime Minister Boris Johnson's science advisor warned that some hospitals look like war zones. Almost 40,000 coronavirus patients are being treated in British hospitals. Avril Haines will be the first woman to oversee America's spies. Haines also became the first member of President Trump's cabinet to approve Senate approval. The 84-10 vote for confirmation came hours after the president was sworn in. As National Director of Intelligence, Haines will oversee 18 intelligence agencies. And United is mapping out a recovery plan from last year's record loss. The goal is to top pre-pandemic profit margins in 2023. United says this year will serve as a transition after the collapse in travel demand. United says it's more than halfway to finding $2 billion in cost cuts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
America has been tested, and we've come out stronger for it. We will repair our alliances and engage with the world once again. The answer is not to turn inward, to retreat into competing factions. We must end this uncivil war that pits red against blue, rural versus urban, conservative versus liberal. We can do this. This is America's day. This is democracy's day.
Joe Biden sworn in as the 46th president of the United States. From New York City this morning, good morning. For our audience worldwide, alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Here's the price action, a feel of where we are this Thursday morning with an ECB rate decision just around the corner. Equity futures up another 10 on the S&P 500. We're up 1/3 of 1%. Record high on the S&P, record high on the NASDAQ, record high on the small caps on the Russell. In the FX market, going into that ECB decision, many people don't expect a change, but look ahead to the news conference 45 minutes after that. The euro is firmer. The dollar is weaker across the board here, Tom. Against G10, it is a weaker dollar story.
I wonder, John, at the ECB meeting if Lagarde will answer on Bitcoin. Bitcoin crushed this morning, really right on support and even breaking through 31,755. You wonder about that, John. Is she going to mention that after the comments last week?
It'll be one of those questions right at the end of the news conference. I've been in these press conferences before. If you're near the end and everybody has already asked the question that you wanted to ask 20 times over, I would have further down the page just a question maybe on Bitcoin. That's where I'd place that question.
That'd be my first
later.
question to her, the way it's breaking down from 40 down to 31,000. Ken Rogoff and Eric Nielsen were on fire this morning, agreeing with Lagarde on the criminal intent of use of the coin. Right now, Emily Wilkins will join us now, our Bloomberg government reporter. Emily, I just got in the morning schedule for the Biden group, and it is such a throwback to 5 years ago where they talk about the president, the first lady, the vice president, and the second gentleman. I guess we've coined a new phrase here. It's like Farrell is like the star of the show, and I'm like the second gentleman on surveillance. I mean, it's a whole new world, isn't it, Emily, with a second gentleman?
I mean, we've got a world with a second gentleman. I think one day we're going to see a world with a first gentleman.
Well, we will see. I mean, there it is, folks, the language chaining. What will you look for today, Emily?
So today, sort of the big news is that Biden is going to be signing another batch of executive orders on the COVID-19. That's what his administration has said they would focus on. It's what they campaigned on. We're looking at several different executive orders here, including one that would require people to wear face masks in airports and on planes. Remember, one of the executive orders that Biden signed yesterday required everyone to wear a mask on federal property, and Biden is also challenging Americans to wear a mask for the first 100 days of his presidency.
Emily, help me with this. Some of these guidelines that are being unveiled already exist. These policies, how much do they actually back up what already exists, and how effective will they be?
You're right. Some of these policies do back up what we're already seeing. I think the key here is that with the Trump administration, Trump largely left it to states, to businesses, to local officials to say, hey, these are the rules and we want you to follow them. And now with the Biden administration, we're seeing more of a national federal focus where Biden is saying, all right, now I'm president and I'm going to be setting the tone. I mean, even things like yesterday when we saw Biden wearing a mask, sitting behind the Oval Office desk, that's not an image that we saw with Trump.
What has the biggest surprise, Emily, been for the Biden administration coming in, doing an assessment of the vaccination rollout plan, and then ascertaining whether it's feasible to achieve that 100 million doses of vaccine in the first 100 days goal that Joe Biden has laid out?
Well, Biden administrative officials have told our reporters that they are concerned about what they're currently seeing as far as what the White House's plan are, what's the infrastructure there. There's also, remember, that new strain of the virus that has now come over from the UK and is spreading in the US. That's also something they're concerned about. So these are all things they're keeping in mind as they try to come forward with a plan for how to handle the pandemic and how to achieve their goal of having 100 million vaccinations in Biden's first 100 days.
Emily, when does a Senate trial intrude? Is it like any day? Is it like we don't know? Or is that out there weeks?
We have been asking Nancy Pelosi that question because it is up to her to send over those articles of impeachment. It's up to Pelosi to figure out when to send them over. And then there's a question of how long this is going to last. Republicans and Democrats alike feel like they've got a bunch of stuff on their plate they need to get through. They don't want to spend a long time on this trial. We are seeing reporting this morning saying that the trial could be as short as potentially 3 days. Remember, the last time it was more like 3 weeks.
Well, Emily, I can tell you for this market, the focus is on whether that trial disrupts the stimulus effort. Senator Romney pushing back yesterday. How much would that complicate the effort?
The Biden administration wants this stimulus effort to be bipartisan. That means that they need at least 17 Republican senators to go ahead and support it. And moderates like Romney, like Lisa Murkowski, senators who have already begun to come out against the plan, were sort of seen as key votes for the Biden administration to get. So I think what you're going to be seeing now is more discussions, more negotiations, figuring out what people are and aren't comfortable with. I mean, a big thing that you hear when these Republicans talk about their concerns are that this would be a $1.9 trillion spending bill when Congress just passed last month a $900 billion spending bill. So there are concerns about what that's doing to the debt, what that's doing to the deficit, and what that means for the economic recovery.
Now that we have a Biden White House, are there any Trump Republicans left in Senate, in the House?
Absolutely. There's still ardent defenders of Trump in both of those chambers. I think there are a number of politicians who they still see Trump's base out there. They still see all these people who were really, Trump's message resounded in them. They were huge supporters of Trump. And a number of them see their job as to continue to cater to those supporters, to hear them out, and to kind of bring their will to the Capitol building.
Emily Wilkins down in Washington, D.C. Emily, we appreciate your time, your effort over the last 4 years, never mind the last 24 hours. Emily, thank you very much. Tom, in many ways, the debate around stimulus hasn't changed. What do we call it? Is it aid or is it stimulus? And with an economy still virtually shut down in many places, should we be thinking about stimulus yet? And if it is on aid, then I'm sympathetic with the view that it needs to be targeted. If you have a job, should you be receiving a check from the federal government? If you have a job and you earn $75,000, should you be receiving a check from the federal government? And where will that check go if you do receive that check? And that's the issue. We saw what happened with the savings rate last year. Some of that money, Tom, if you already have a job, it's just going to go straight back into savings. If the focus is on aid, then of course it should be targeted at the people that are struggling to pay their bills right now, the people who have lost their jobs.
John, within the media, you've provided great leadership on this, and while you were away on your sabbatical, the fact is Lisa and I continue to drive this conversation forward. The answer is, John, it's America, and that's not how it works. It's radically different than what we heard from Chancellor Merkel today in Germany or others across Europe. There's just no ifs or buts about it, and a new president and a president from his generation isn't going to change that.
The conversation continues this morning right here on Bloomberg Surveillance, live on Bloomberg TV and radio, alongside Lisa Abramowitz and Tom Keene. I'm Jonathan Ferro. In around about 20 minutes' time, we will have an ECB rate decision. 45 minutes after that, we will have a news conference in Frankfurt, Germany, with President Christine Lagarde. With equity futures up another 10 on the S&P 500, we advance 0.25%, with equities at all-time highs in the US and across the world. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
waking up to record highs. We've got used to that over the last several years. We're doing it again this morning. We add some weight to the S&P 500 from New York. For our audience worldwide, alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Here's a taste of the price action this Thursday morning. Good morning to you all. Equities up 11 on the S&P 500, up around about 1/3%. A record on the S&P 500, a record on the NASDAQ, a record on the Russell. Going into the ECB, 15 minutes away, yields on treasuries at least, up about a basis point on a 10-year to 1.09%. And in foreign exchange, the euro showing a little bit of strength. Euro dollar up about 1/3%. Across the board here, dollar weakness. The strength is on the other side of the currency pair in G10, away from the US dollar. Sterling up another 0.5%. That's the cross-asset price action in the United States and worldwide. Let's bring in a good friend of this program, Bloomberg's Romain Bostic, to get you some stocks on a move this morning.
Yeah.
Hey, Romain.
Hey, good morning, John. Well, you talk about some of the biggest volume movers out there this morning. We'll start off with United Airlines. They reported earnings last night, or rather, I should say, a loss. That $7 a share loss for the quarter, a tad worse than expected. For the full year, they had a $27.57 loss. That was the worst loss in the company's 94-year history. And more importantly now, the company really trying to push investors' attention out to 2023, basically saying that is the year where they feel like they can get back to some of those pre-COVID financial levels. Keep an eye on that. And Tom, you got to keep an eye here on PayPal. Interesting note out from BTIG upgrading the stock, basically saying the company's foray into cryptocurrency, Tom, going to pay off, could add as much as $1 billion in value. I don't know if you've been keeping a tab here, Tom, on crypto prices.
Where are you on Bitcoin? Ken Rogoff was scathing. We're going to do that later. Eric Nielsen was scathing. We know how Pharaoh feels, and Lisa. Come on, Romain, help me here with Bitcoin. Is it for real?
Entry point he's looking for?
It's down on the day, so some would say, you know, that's the entry point for you, Tom. I mean, right now around 32,000. But you know, you have to be in it to win it. Anyway, let's take a look at Apple real quick here, Tom. Here's another topic I'm sure you'll be into: VR headsets. Mark Gurman, of course, our great reporter out west there, who covers Apple, basically has a great scoop out there about Apple coming out with this new VR headset. Going to be basically a precursor to something a little bit more advanced, I guess. Maybe your Bloomberg surveillance viewers and listeners can use that to take part in this show. Flip up the board here. There's something else you might be interested in. Bellwethers. I was taking a look at this. Remember all the bellwether stocks out there? You probably remember this, Tom. Back in the day, Alcoa used to be sort of the synonymous with the start of the earnings season. Of course, that's back when it was a large cap company. Now it's a small cap company. People still pay attention to it. They came out with earnings last night. They were better than expected for the fourth quarter, but their guidance going forward really dismal, and it had a lot to do with bauxite and other things that I won't bore you with here. IBM, though, also another stock that used to be a bellwether. They're going to report after the bell tonight. Keep an eye on them. Remember, Arvind Krishna only about 3 months away from his one-year anniversary. Expectations there really high here to make that transition. And Intel, another former bellwether. Their new CEO hasn't taken over yet. Pat Gelsinger, he's still got a month before he jumps on the job, but investors really want to know manufacturing strategy, Tom.
Romain, I can't concentrate.
Okay.
Where's your bow tie?
Are we both allowed to wear? Can we have two bow ties on the same show? Is that allowed?
Banned.
You know, come on,
I don't
Pharaoh,
know.
weigh in on this.
Where is Pharaoh, by the way?
We don't know. Capri, Key
Because
West,
I see
who
you,
knows?
I see Lisa, and then I just get like this hologram of Pharaoh
I'll be
in a
singing next
hotel
week.
somewhere.
Can I weigh in on Bitcoin? Just quickly, let me say my piece on Bitcoin.
Please.
I have two things to say about Bitcoin. There's a reason I don't ever talk about Bitcoin. One, I really don't know enough about it. I don't understand the risk tolerance around it. I don't understand why it moves on any given day. That's why I don't discuss it, point one. The second point, and this is the more important point for me, I've found that a lot of people in our industry use cryptocurrencies as a way to attract a bigger audience and contribute to the volatility around them. And I think that's a huge mistake. And I think if you are going to cover something like cryptocurrencies, Bitcoin, you need to do it with a little bit of responsibility. And I don't see responsible coverage of this asset class. And I don't want to contribute to anything negative around it.
I will just say, can I weigh in? And then, Romain, I will let you finish up. But one thing I do want to say is BlackRock just came out and actually allowed 2 of its funds to invest in Bitcoin. There is an increasing institutional presence here, which raises a question of how much money could be potentially at stake. That is, whether it's pensions, whether it's individuals, et cetera. And that might be part of the issue that's driving as much interest. Romain, go ahead.
And to Lisa's point, too, I mean, when we talk talk about PayPal being invested in this, when we talk about companies like MicroStrategy basically taking half their balance sheet and investing in crypto, you have to pay attention to a little bit more, because now it does become a fundamental driver for some of these companies, no matter how speculative the underlying asset is itself.
Rowan Bostic, smart. Thank you so much. Greatly appreciate that, particularly on the tumult at IBM as well. There are announcements that come out, and you come out and you go, that's brilliant. And that's what I felt when I heard that the great Krishna Mamani was moving to Lafayette College. You talk about a career change, moving from credit at Putnam years ago, where he was iconic, over to all of the management he did at Internationalist, Oppenheimer funds, and then on to Investo. And all of a sudden, with 850-some million in endowment, a huge endowment per student, Krishna Mamani has a career change at Lafayette College, Easton, Pennsylvania. Krishna, wonderful to have you with us. What has been the biggest surprise of dealing with the finance, the investment, and the politics of endowment investment?
Well, so there isn't much politics at the endowment. It's really a pretty straightforward situation. We invest for the benefit of the college, and the investment committee has been very, very supportive and very cooperative. So the biggest challenge for the endowment, and not just at Lafayette College, but everywhere, is how are you going to generate high returns in a low interest rate environment for the next, not 1 year or 2 years, next 10, 15, 20, 30 years. That's really, at the end of the day, the biggest challenge.
Are you using equity and dividend growth as a yield equivalent to meet your actuarial assumption?
Well, so the way we invest is really more on a total return basis rather than on a yield basis. And I think that's where most of the endowment world is today. Equities certainly play a very large part in any portfolio that is looking for long-term returns. And I think the private markets play a very significant role as well. And I think from my perspective, that has been my biggest learning. I was focused on the public markets for most of my career. Private markets and endowment are huge.
Build on that, Krishna. How difficult has that adjustment been to make that shift from purely public into private markets?
Well, so investing is investing, and the principles of investing remain the same. But the change, I think, is when you invest in a private security, you're committing for a very long period of time. With a public security, you buy a mutual fund, you don't like it, you can withdraw your money tomorrow. Here, you're stuck with it for 10 years. So I think that is really the characteristic of the private market, that you're locked in for 10 years. That is something that you have to think about real hard before you commit your money. Evaluate the manager a lot more thoroughly than you would otherwise.
All right, well, Krishna, right now, given where markets are, would you rather take liquidity risk or would you rather take credit risk?
Well, so, normally credit risk would be good, but the problem is credit spreads are significantly tighter than, and overall interest rates are relatively low. So the returns that you can get out of credit assets is really very, very low, or historically low. So, we go into private markets not because we want to go into private markets. Who wants to take in liquidity? But when you don't have enough returns from other places, you have to go every place where you can harvest some risk premium. And private markets still provide you decent returns relative to public markets.
Hey, Krishna, that right there is the problem. Tom, in about 7 minutes' time, we'll get an ECB rate decision. 45 minutes after that, we'll hear from the ECB President, Christine Lagarde. Last time we heard from them, they extended their pandemic emergency purchase program out to March 2022. And in 2023, they'll still be reinvesting the bonds that they've bought, even if they stop the additional purchases. So, Tom, just think about that. What did we learn in the last 24 hours? That the ECB is targeting credit spreads, according to our reporting over in Frankfurt. That's been our experience of the last several years. Anyway, these central banks, long after this pandemic has passed, will be sitting on massive balance sheets, reinvesting those bonds, Tom. Their presence in this market is going to go right the way through this recovery.
And then, Krishna, how do you invest long term, endowment perspective, 5 years, 10 years, 20 years, given the central bank intrusion that John describes?
Well, so, I think the central banks are doing what they need to do, which is to revive an economy. And the pandemic certainly caused them to intervene a little bit more than they would have otherwise, but they have been a force in the market for quite some time. And that is because of the structural, secular reasons with respect to lower productivity and lower growth. That is nothing new. That has been there with us for a long period of time, and that is a central thesis. The question that John was raising is an interesting one, which is, unless things change on a global basis dramatically, that is, the trend growth rate in developed markets increases meaningfully, central banks will be with us forever. Pandemic just got us there faster. We would have gotten there even without the pandemic.
Krishna Mamani of Lafayette College, the CIO of the Endowment Fund. Krishna, great to catch up. Come back soon. Always enjoying the conversations. Tom, it's critical that we realize the major difference between now, at the beginning of this recovery, and 10 years ago, coming out of the financial crisis. Coming out of the financial crisis, people believed that rates would go higher. They believed that yields would climb. In Europe, if you ask someone now, through the next recovery, through the next decade, can Europe engineer a recovery that leads to higher policy rates of the ECB, yes or no? I guarantee, Tom, the majority of people we ask that question today will say no. Now, just think about that. Rates not going anywhere. Sounds like Japan.
Yeah, but it sounds like Japan, and I'll take your point, John, but I would say there's a partition between a lot of market participants looking for higher rates and sort of the major house economic financial strategists who are really pushing against that and agree that it will be a sustained low rate milieu for many years to come.
We'll talk to Alberto Gallo of Algebris about it in just a couple of minutes' time when we bring you that ECB rate decision from New York City this morning. Good morning. Alongside Lisa Abramis and Tom Keene, I'm Jonathan Ferro. For our audience worldwide, heard on Bloomberg Radio, seen on Bloomberg TV, with equities adding just a little bit more weight to the S&P 500. Record highs across the board this Thursday morning. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. In his first full day in office, President Biden is taking aim at the coronavirus. He'll be rapidly reversing or refashioning many of Donald Trump's most criticized policies. The president will use executive orders to overhaul the approach to virus testing. He'll also stabilize the supply chain for critical medical supplies and improve the government's ability to provide fast and fair vaccine distribution. Moderate Republicans in the Senate appear skeptical toward President Biden's stimulus package. Senators Mitt Romney and Lisa Murkowski indicated that it's too soon since the last stimulus bill to consider another one. The president would likely need the support of both lawmakers to get the measure passed. Meanwhile, Donald Trump's second impeachment trial is still on hold. House Speaker Nancy Pelosi hasn't triggered a proceeding that could slow down the Senate's new Democratic majority and delay confirmation of key Biden administration officials. It's up to Pelosi to decide when she will formally transmit the article of impeachment to the Senate. And it is a renter's market in London. If you're looking for the city's poshest homes, houses in the most expensive areas of London are sitting empty for more than 2 months before finding tenants. That is the longest waiting period since the last financial crisis. The number of luxury homes up for rent in the central part of the city has surged 75% from a year ago, and rents are falling at the fastest pace in a decade. And the price of Bitcoin fell to its lowest in 3 weeks. The world's largest cryptocurrency dropped below 33,000. Bitcoin has been trending lower ever since breaking through the 40,000 level. That's led to growing speculation that the market is in a bubble. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
From New York City for our audience worldwide on this ECB decision day. Good morning on this Thursday morning alongside Tom Keene and Lisa Abravitz. I'm Jonathan Ferro. An ECB rate decision out in about 45 seconds or so out of Frankfurt. Let me just give you a taste, the flavour of this market as we approach the opening bell in New York. Record highs across the board in yesterday's session on the S&P 500, the Nasdaq and the Russell. The outperformance came from big tech, though. Keep an eye on that into the opening bell this morning. Futures up on the S&P, about 9 points, up 0.25%. In the bond market, just to give you a feel of Treasury stability, the story of the last couple of days. Yields up barely this morning, up about a basis point at a 10-year to 1.089%. And to round things out in foreign exchange, all through this morning, dollar weakness against all of G10. For the euro, euro-dollar moves out about 1/3%, euro-dollar 121.44. A couple of seconds, we'll get a rate decision from the ECB. Rates at negative 50 basis points on a depot rate, 0 on the main refinancing rate, and nobody expecting changes today. And there's the call, unchanged over at the ECB on rates. People expecting guidance to remain unchanged as well. We'll run you through those headlines as they drop. But Tom, in about 45 minutes, we'll hear from the president, ECB President Christine Lagarde, and she finds herself in many ways in a similar situation that President Draghi found himself through much of the last cycle. He did his bit, and then he waited for everyone else to do their bit as well. And for Christine Lagarde, she's got to focus on an additional part of that. She needs to see a much bigger fiscal impulse in the way that we're having that conversation here in the United States. And on top of that, she desperately needs to see the authorities ramp up the vaccination effort, and quickly.
Well, I'll go to the social part, John, but when these headlines come out, and folks, these are 40 and 50 headlines, and they're all coming out, and Farrell's got to translate them with Mike McKee. I get all that. But what really intrigues me, John, is she has to deal with the negative rate experiment. How's that experiment going?
The only people that believe that experiment is going well, Tom, are the people that have made the decision to go there.
Thank you.
The bulk of the people that we speak to think negative interest rates are counterproductive. And if you go back to when these negative interest rates came through in Europe, it was 2014. They took the depot rate negative in the summer of 2014, and they did it because of the currency, the FX channel. It wasn't about bank lending, it was about the FX channel. And to some degree it helped. It certainly did, because at that point the euro was far too strong, far too strong. Now, we've got problems with bank lending again. If you look at the most recent bank lending survey over at the ECB, there's clear worry about lending standards tightening. That is not what the European Central Bank wants to see. And I don't know what more they can do, Tom. Look at the headlines that are coming out right now from the ECB. This is guidance that's in line with what we heard last month, but it's worth repeating. The emergency purchase program is going to run at least through the end of March 2022. They'll reinvest that QE debt for an extended period of time, even after the first rate hike. So if you believe, let's just say you believe that we'll get a rate hike from the ECB at some point in this cycle. After that, the ECB will still be reinvesting the debt on its balance sheet that they've been buying over the last year. I want to bring in Alberto Gallo of Algebris on this. Alberto, the ECB is going to be in this market for a long, long time. How does that shape your view on fixed income in Europe?
Good morning. Sometimes the most interesting things that come out of central banks are the things they don't talk about. And there's two big questions here. One is, how long are they going to keep going with the emergency purchase program even after the pandemic is over? And it looks like, as you said, that that's going to be with us for a long period of time, even beyond 2022. And the second one is, what happens if there's another crisis? Now, interest rates are already negative. Net supply of European government bonds is negative this year. The ECB is buying more than the governments are issuing. So, they got to think about something new. And that's where, some worrying scenarios come up for investors of very, very strong financial repression, very low yield below inflation, even though inflation is pretty low in Europe.
Alberto, I've got to jump in because what you're talking about is so important. Are you saying that we might not have seen the end of this and that something new might be coming? And I'm not saying anytime soon. I just want to understand the kind of something you're thinking about. You're thinking about equities. Surely we've already done everything we can do on the fixed income side.
You know, the biggest question here for investors for the next years is whether governments are going to be able to beat secular stagnation. Now, it's a moment of celebration in the U.S. with a new presidency, and probably the Biden administration has a shot at this with a lot of fiscal stimulus and infrastructure spending. But if you look at Europe, the recovery plan is still very, very small, and we've got German elections later this year. It's not exactly the year where, you know, the European Union is going to splurge on fiscal. So, you know, the things the ECB doesn't talk about is how are they going to get inflation back up, how much more fiscal is needed, and also, you know, what's the end game for the PEPP. And it looks like, you know, unless you're seeing Germany spending a lot more, which is unlikely this year, it looks like the emergency purchase program is going to be with us for a much longer period of time, which means savers are getting returns well below inflation. So, you know, one of the casualties of the pandemic has been the risk-free rate. It's now very, very deeply negative, and it's going to continue to be like that, especially in Europe.
It sounds like a process in search of a theory, Alberto Gallo. What's the underlying theory here? Are they literally making it up in the United States of Europe as they go?
Our theory is interest rates at the extreme become counterproductive. So, you know, you've got Argentina with very high interest rates. In theory, they are supposed to curb inflation, but at some point you have a compounding impact and they become inflationary. Conversely, when you have deeply negative interest rates and they are persistent, they create asset bubbles which burst and then create deflation. They keep zombie companies alive, which reduce productivity. So you really need to shake up the system, do reforms, invest in infrastructure, and improve productivity, which the U.S. has a big shot at with this administration.
Meanwhile,
in Europe, it's a much tougher game to play this year.
Meanwhile, Alberto, you have a rather difficult decision as a portfolio manager of whether to just go by the central banks and ignore risk. At a certain point, it makes no fundamental sense for Italian bond yields to be getting lower with respect to German yields as their government basically threatens to fall apart. This is because the ECB has been buying more of their debt. Do you lean into that as a portfolio manager, or do you say risk matters?
We say risk matters. Last year, we were over half in cash in our global credit fund before the pandemic hit, and we had a lot of protection on. And you know, we're getting to a point where where the odds are very much skewed against the investors. So you can make 2 cents if you're right, but if you're wrong, you can lose 5 or 10. And the BTP example is spot on. So we're trying to preserve the odds to be at least equal or in favor of our investors. So we're not buying BTPs here. We're not buying long-dated investment-grade debt. But there are some areas where there's still upside. In some of the periphery countries, in convertible debt, in some of the companies which are going to be the companies of the future. So, you know, we're pretty cautious, but we still have some upside bets on the reopening of the economy.
Alberto Smart, thank you so much. Alberto Gallo with Algebris Investments here on an ECB looking for a solution. What I noticed there is the headline out to the end of 2023. Michael McKee understands the end of 2023 with his good questions to Chairman Powell running our economic coverage. Michael McKee, your thoughts on the challenges Madame Lagarde faces today?
Well, she's got to reassure the markets that the decline in economic activity that's likely to come isn't going to be serious enough to change policy. They did not adjust anything today, so pretty much steady as she goes, even though we've seen increasing lockdowns, and those lockdowns keep getting extended. Their economic forecasts in December were for a GDP growth of 3.9% in 2021. She may be saying that the risks are to the downside when she does her news conference coming up in about 40 minutes. And then what? The question will be, then what? They kept the PEPP program at 1.85 trillion euros. And as you say, they're going to extend the reinvestments back to 2023. No change there, but maybe they speed them up. Maybe they move them forward and do more purchases in the first quarter, assuming we get a bigger rebound towards the second half of the year.
Mike, Mike, right now we don't have a problem with financial conditions in the United States or Europe for that matter, and the outlook, as you know, is just beyond the control of the ECB and the Governing Council and the President Christine Lagarde. It's the vaccination effort in Europe lagging behind much of the developed world. Is that the crucial issue for you as you look at the year out from here, Mike?
Yes, in pretty much every country, John. You've got to get people vaccinated. We've got to get to the point of herd immunity, and it's gotten off to a rough start everywhere. That is not totally unexpected. This hasn't been done on this kind of scale before. But now in the United States, the Biden administration has to really be able to put its plans in place to move forward and get that going. And Europe's got to get going with their vaccination program as well. The only ones who seem to be really moving fast are the Brits, although they started off on a tough scale too. So it's really the question, as Jay Powell and others have said all along, the virus is running the economy right now.
Mission critical. Mike, great to catch up. Michael McKee here in New York, looking down to Washington, D.C., to the ECB over in Frankfurt, and to Europe and the rest of the world. And Lisa, the outlook for Europe right now, just day by day, week by week, if that vaccination program doesn't pick up in places like Germany and pick up fast, the outlook for Europe is getting worse and worse.
Yeah, and this is one reason why you've pointed to the euro sterling cross here, the idea that even as you see the decimation in hospitals throughout the United Kingdom, there still is a bet that that economy can revive faster because they're getting vaccinations into people's arms more quickly, John.
In about 35 minutes' time, we'll hear from the ECB President, Christine Lagarde, right here on Bloomberg TV and radio. As we count you down to the opening bell, before we get there, in about 35 minutes' time, we need to look at jobless claims in America. For our audience worldwide, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg.
我开始做直播是在今年年初的时候，就主要是去年的话，我们参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
For the first time in a very long time of more people falling back into poverty. We don't see any inflation pressures here. We're still living through a very disinflationary COVID shock.
All of the telltale signs of a structural bull market at play here.
This is going to be an excellent year for growth.
I still don't think we've seen the fullness of what his administration is going to do for the economy.
It's going to be enormous spending in this country. I think the boom is coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television worldwide. A simulcast this day of the first full day for President Biden. The extraordinary pageantry that we saw yesterday, the music last night that I slept through. John Farrow, transfixed by what Bruce Springsteen did last night at the Lincoln Memorial. John, your thoughts as the foreign guy on what you observed yesterday in Washington?
It's back to normal. Back to the conventional approach to making policy. And in many ways, what we expected, Tom, the volume might turn down just a little bit. And I think we experienced that in the first briefing yesterday evening. What is normal, though? What does normal achieve? Normal wasn't good enough 4 years ago when Americans went to the polls. And I think that they want to see some real change. And for that matter, Tom, for that reason, this administration's got to hit the ground running. And they are. They're trying already. The President Joe Biden, has talked about a bipartisan approach to fiscal stimulus, talked about unity. We'll see how easy that's going to be, Tom. I think most people think that's going to be increasingly difficult. And the fact that Senator Romney came out yesterday, straight after that inauguration, and talked about how he wouldn't be going for what's on the table, speaks volumes, I think.
I mean, Lisa, to me it was so important, and some of the imagery, the Tomb of the Unknown Soldiers, and of course the three former presidents lined up at Arlington in casual conversation. There was a whole symbolism of hearkening back. Lisa, what do you look for forward into the month end of January?
Well, I think that John raises a good point, that the whole message of unity broke down pretty quickly as they assessed the landscape, both politically as well as economically. What I'm looking for is not only the vaccination schedule, how are we going to reach some sort of herd immunity? How are we going to get the economy back online at a time when it is so difficult to assess risk, so difficult to assess the pain? We're going to be getting those jobless claims in about a half an hour time. We're expecting to see an ongoing deterioration of the U.S. jobs market. Tom, these are the issues, and they are massive ones that are facing the Biden administration. So yes, the pageantry, great, very, very short-lived as they face some of these problems.
I mean, this is so important, John. You mentioned it earlier, and Lisa mentions it now, the American labor economy. And John, all of this is buttressed up against the pandemic and that jobs report that was really pretty grim.
Yeah, a negative print and a market that continues to look through it. Let's be clear here, Tom. At some point, we have to move away from the aggregate numbers because this government, this administration, will be focused on the redistribution and the increasing inequality, the gap that widened between the haves and have-nots through this pandemic. The first fiscal package will go some way towards trying to alleviate some of that. That's not where it will stop. And I think that's when it gets on the market's radar. And this is really, really important. This market participants, markets aren't meant to have any kind of real moral compass to take in the inequality around us. Why? Because what matters at that point is just the aggregate numbers, and it looks like the aggregate numbers will improve in the year to come. But at some point, when redistribution gets on the radar in a much, much bigger fashion with this administration, that's when it comes onto the radar of this market. When you start thinking about higher corporate tax rates, potentially, if they can get them through, if you start thinking about higher tax rates per se, at the state level, not just the federal level, Tom, that's when it gets on the market's radar just a little bit more. I don't think it is right now. I think it will, though.
I want to get this in quickly, folks. Thrilled you're with us on radio and TV. Futures up 9, Dow futures up 57. Rates, well, a 109 on the 10-year yield. Maybe that ought to be a 111, 112. It's not. The dollar weaker. John mentions that earlier. We're watching euro sterling as well. And the other thing we're watching and we're doing smart conversation on is Bitcoin. Eric Nielsen of Unicredit scathing this morning on Bitcoin and particularly across his Europe. And here is the professor from Harvard, the bravest book on economics in the last number of years, The Curse of Cash. Here is Ken Rogoff on Bitcoin.
The governments are not going to allow pseudonymous transactions on a big scale. They're just not going to allow it. The regulation will come in. The government will win. It doesn't matter what the technology is. So I think, you know, over the long run, if there's not a use, yes, the bubble will burst.
Hugely influential voice there, Rogoff of Harvard. John Farrow, I want to know what the United Kingdom's waiting for. The U.S. likes to say it's internationalist, but the city is truly international. Do you look for regulation, John Farrow, out of the United Kingdom on Bitcoin?
I think increasingly you'll see the regulation around this. And to Ken Rogoff's point, governments don't want someone else in control of the currency. And Tom, the reason why many people consider this not to be a currency is because you can't pay your taxes with it. That's what money's all about. Can you pay your taxes with it? Bottom line, that's all that matters. And that's all that matters to governments as well. They don't want you trading in the currency per se, if you want to call it that. They don't want you trading in a currency that they can't take on to pay your taxes. That's what matters for governments. They'll be clamping down on it hard.
It'll be interesting. Thank you so much for the pro and anti-Bitcoin discussion here across our various Twitter accounts and email and hate mail as well. Speaking of hate mail, he loves to send me hate mail on Apple. Michael Holland joins us now, Holland and Company. He's paid a lot of taxes on capital gains over the year. Michael, what do you do with a stock that's a melt up and you've got a tax obligation due? How do you handle that?
One of the things you can do is choose your favorite university. You had the Lafayette Endowment head on a few minutes ago. Give your appreciated stock to the university of your choice for financial aid for some of the students. How's that? You get the tax write-off and you help education and the equalization of opportunity that Jonathan Farrow was just talking about.
Well, Michael, I'll let you worry about how to deal with the tax bill. There is a question of how to deal with risk right now and how to even assess it. And I got to say, I was really struck by Seth Klarman, this About Post group, when he wrote in the financial note that was obtained by the Financial Times, with so much stimulus being deployed, trying to figure out if the economy is in recession is like trying to assess if you had a fever after you just took a large dose of aspirin. He likened the current situation to investors being frogs boiled in water, slowly becoming desensitized to risk. How do you navigate as an investor?
Well, Seth Klarman has been brilliantly investing for decades and would never ignore what he's saying. I think right now, Lisa, I'm mindful of where the market's psyche is, and with Janet Yellen pairing up with Jerome Powell right now, I think they are a panacea for people concerned about an overvalued market, that the market could become even more overvalued. The trick will be a year from now when I hope we're talking that the economy has fulfilled some of the heightened expectations about when the vaccine gets out there. I was interested to see a Bloomberg blurb yesterday about Amazon now moving in to help out with the distribution of the vaccine. I think we could get some positive surprises rather than negative surprises over the next couple of quarters on the vaccine front. If that happens, I think some of the animal spirits in the economy may start to waken up.
Forgive me for being so cynical, Michael, but do you think that big tech sees the writing on the wall? I mean, why has Amazon waited so long to come in and talk about this? Why did Twitter wait so long to ban Donald Trump? It all seems a little bit convenient that all of this has happened basically in the month that the incoming administration is coming through.
I think think your cynicism, John, is well placed, and I think that the people who run these companies have seen where we're going, and I think there was more than just Netflix yesterday when the stocks like Amazon plowed to the upside dramatically. I think there's a new sheriff, and I think it's going to be. I think the tech companies are going to have some comeuppance over the next year, but I think overall things probably are going to be okay.
Meanwhile, given your role at State Street and at some of the biggest asset managers over the years, seeing the transformation in that industry, what are you expecting in the years ahead under the Biden administration when it comes to consolidation and asset management into the hands of just a few behemoths?
I think so long as the behemoths behave themselves, it's difficult to make a serious political headway in terms of attacking them. I think what's happened, Lisa, over the last decade is, and particularly the last few years, is a dramatically favorable position for the people listening to the call here, watching the call, with respect to they just don't pay very much to have their money taken care of, and so the fees continue to cascade down. It's a very favorable development. So the behemoths, if they don't manage it right, and we just had Jonathan talk about how the techs are trying to manage right in a new environment, I think that the big people like State Street and Vanguard and Fidelity will continue to do the same thing. They're smart people running these places, and so long as they keep making it better for all of us who are investors, I think they reduce the possibility of draconian things happening to them.
Michael, great to catch up. As always, a real gentleman of Wall Street, Michael Holland. Michael, thank you, sir. Thank you very much. About an hour and 20 minutes away from the opening bell. Equity futures are at 38.53 on the S&P 500, record high in yesterday's session. And in many ways, we're talking about central banks. You mentioned that piece in the FT, Lisa. Just quickly, can you imagine what the op-eds would have looked like if these central banks had not stepped in the way that they did?
You raise a good point, the idea of damned if you do, damned if you don't. The real issue at this point is how much are central banks covering for fiscal policy, how much they're allowing a lack of cohesive plans in order to even out some of the underlying economic problems, John. And I think that is where the key debate is right now.
I think they're providing accommodation for fiscal policymakers. In fact, President Lagarde has been pretty open about that. We'll hear from her in about 20 minutes or so, right here on Bloomberg TV and radio. You are listening to Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Record highs in the equity market. And judging by the commentary from some market participants, these are hated record highs in a tough time for society and the global economy. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. President Biden plans to issue a set of executive orders today aimed at fighting the coronavirus. Those orders will reverse or refashion many of Donald Trump's most criticized policies. The president will overhaul and unify the approach to virus testing and use federal powers to stabilize the supply chain for critical medical supplies. He'll also boost the government's ability to provide rapid and fair vaccine distribution. Meanwhile, the Biden administration is mending fences with the World Health Organization. Infectious diseases chief Anthony Fauci pledged the country's commitment to the agency today on a video link. The U.S. will join COVAX, the WHO's multinational effort seeking to deploy coronavirus vaccines around the world. Donald Trump had said the U.S. would exit the WHO. And the UK has suffered its worst day yet in the pandemic. More than 1,800 deaths were recorded in a 24-hour period. And Prime Minister Boris Johnson's science advisor warned that some hospitals look like war zones. Almost 40,000 coronavirus patients are being treated in British hospitals. Avril Haines will be the first woman to oversee America's spies. Haines also became the first member of President Biden's cabinet to win Senate approval. The 84-10 vote for confirmation came just hours after the president was sworn in. As Director of National Intelligence, Haines would oversee 18 intelligence agencies. And United Airlines is mapping out a recovery plan from last year's record loss. The goal is to top pre-pandemic profit margins in 2023. United says this year will serve as a transition after the collapse in travel demand due to the virus. United says it's more than halfway to finding $2 billion in cost cuts. Global news 24 hours a day on air and on Bloomberg Quick Take. powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
A great experiment takes great determination, the will to do the work, and then the wisdom to keep refining. President Joe Biden has called upon us to summon now the courage to see beyond crisis, to believe in ourselves, believe in our country, believe in what we can do together.
We've learned again that democracy is precious. Because of you, democracy has prevailed. America's story depends not on any one of us, not on some of us, but on all of us, on we the people.
Joe Biden, Kamala Harris making history down in Washington, D.C., sworn in as the President and Vice President of the United States of America. Alongside Tom Keene and Lisa Abramovich this morning. Good morning, I'm Jonathan Ferro. Record highs in the equity market in the United States and worldwide. Your opening bell is about 1 hour, 12 minutes away. Going into that, equity futures are positive, up 8. We advanced 0.2% on the S&P 500. Quick feel of the bond market for you across the Treasury curve. Yields just a little bit higher, curve a little steeper, up 2 basis points now on 10s to about 1.1%. On 30s, up 2 basis points and change to 185. Outside of that, Tom talked about it through much of this morning. Weaker dollar, euro dollar, out by another 0.4%. Stronger euro. That news conference, that data, 11 minutes away.
That news conference is important. It'll be illuminating. I wonder, seriously, folks, will Lagarde at the end of the conference, as John mentions, actually address Bitcoin? Right now, an exceptionally important conversation. We're trying to get a sense of history, and for too many of us, history goes back 5 years, maybe 8 years, maybe the distant past of 12 years ago. Julie Norman is at UCL in London and has a real grasp of the history of this nation and the time of major votes. Professor Norman, good morning. I want to take you back to the ginormous shift that Bill Clinton inflicted in 1996 on welfare reform. Gebhardt voted against his president. Daschle voted against his president, and on and on. Are we setting ourselves up for a Biden that will look like Clinton of 1996?
Tom, I think this is going to look different than the Clinton years. Clinton was just such a different kind of politician than Biden is, and his experience was so much different as well. And Clinton was just ruling from a very different kind of position. You're starting from very centrist positions. Biden will be a moderate. He is going to struggle to keep especially many of the progressives of his party going along with everything that he wants to do. But he is very experienced, as we know, with decades of experience in the Senate, getting tough legislation through and working across his own party as well, as we saw during the campaign.
Is Joe Biden, is President Biden going to say, there's much in this given bill that I don't like, but we need to get it through on a bipartisan basis? I mean, is he going to pull away from the left and go for action as Clinton did in 1996?
I think that we will see those kinds of moves from Biden. He's not someone who's going to be beholden to the party on legislation that actually matters to him. And we've seen that already in some of the moves that he's made, in the sense of, he hasn't made himself, a puppet of the left or anything like that. He knows what his own agenda is. He's come out with a very bold plan, one that, of course, isn't going to pass in its current form, but one that he knows there's room for maneuvering across the aisle, even within his own party. So I think he's going to go for what he wants in this. He's not going to be swung by the tides around him.
In the meantime, he's very much looking at the here and now, planning to sign an additional number of executive orders today after signing at least 15 yesterday, including rejoining the WHO, rejoining COVAX, this 92-nation collaboration seeking to deploy COVID vaccines. Julie, how important are these measures? Are these more for the visuals, or do they actually have significant and substantive effects that take place in the near term?
Well, I think it's a bit of both, Lisa. I mean, the executive orders and directives that Biden is coming out with this week, as you said, touch on a number of different issues, not only the coronavirus and the economy, but also climate change, immigration, next week looking at race and equity. So these are all issues that these things actually matter, but it's also signaling what the priorities of this administration are going to be, and where we can expect more in-depth legislation coming down the pipe.
How much will an ongoing impeachment trial in the Senate, say in the next week or two, muddy that message of priority?
I think this is going to be the big question. I mean, it's still unclear if or when this is actually going to happen. We know that Biden himself wanted to get down to business and did not want his agenda muddied by the trial, especially these initial confirmations and some of this initial legislation. It's going to be tough whenever it happens. We know that Biden's been trying to get the Senate to agree to bifurcate business, so to have half the day on the trial and half the day on his business. But honestly, whenever it happens, it's going to be disruptive, and it's going to be tough for his agenda during that time.
Julie, I need an update. on the special relationship. I mean, we had the idea of Trump and Johnson with equivalent haircuts. We can't go with that this time around. What's the special relationship going to look like?
Well, I think this will be really interesting to see how it plays out, Tom. I mean, right now, the UK is trying to position itself as a strong partner, even in contrast or counter to the EU right now. I think the EU's recent investment agreement with China is making the UK trying to promote themselves as a perhaps better ally for Biden, his approach to China moving forward, as well as on other key issues that they've always shared: security, climate change, and of course what will end up being the big conversation, the US-UK trade deal, which probably won't be as much of a priority for Biden as it will be for Johnson.
Judy, great to have you with us on the program. Professor of University College of London, Judy Norman there. Tom, climate change specifically, that's been the big push from the Boris Johnson government to try and build a bridge with the incoming Biden administration. I have no idea how effective it will be, but that's been the idea coming out of the British government.
Well said, and of course that is the feathers ruffled yesterday in Ottawa on climate change. Clearly one of the first actions to upset our allies was on the Keystone Pipeline. There's no question that debate occurred and Mr. Biden acted rapidly.
That's the story coming out of D.C. Let's talk about a story coming out of the U.S. economy, Tom, just quickly. In about 5 minutes, we have to turn our attention to jobless claims in America. Unbelievable to still see a number close to 1 million, still. And that just speaks to the amount of churn in this labor market that continues.
I will do the math, John, and we'll see it, of course, with the jobs report here. Then on, I don't even know where we are now. The jobs report in January reported in February. But you're right, John, in the way the curves are happening, I'm not going to mince words. There's no vector. There's a real stasis here at 900,000.
We'll break down those numbers with Michael McKee in around about 5 minutes' time, and then we'll get to Frankfurt, Germany, to bring you the opening of that European Central Bank news conference with ECB President Christine Lagarde. And many of the troubles she faces at the moment out of her hands. What can she do about it? It's the vaccination effort that is stumbling out of the gate in Germany and across Europe. And also, it's acquiring the vaccines, where Europe has had some difficulty relative to the UK as well. We'll talk about all of that through the next couple of hours right here on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. The data next. This is Bloomberg.
Typical clothes wash, up to 700,000 fibres could come off our clothes.
nous permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc, une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles, et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City for our audience worldwide, good morning to you all. Alongside Tom Keene and Lisa Browitz, I'm Jonathan Ferro. Equity futures up 9 points on the S&P 500, up 0.2%. In just a moment in Frankfurt, Germany, we'll bring you a news conference with President Christine Lagarde. For now, though, we need to get to the economic data in the United States of America, and we can do that with Michael McKee. Hey, Mike.
Good morning, John. Well, we've got the numbers out now, and there are a lot of numbers, but let's start with jobless claims because they're the ones that have been most important to the markets. 900,000 still very, very elevated, but that comes in lower than the forecast for 935,000. This is probably the first week that's not completely distorted by holidays, so it is a relatively clean read, and it does show that we're still seeing a lot of layoffs out there. Obviously, we've had the caveat of how many people may be fraudulently claiming or double claiming or something like that, but 900,000 is still a lot. Adds urgency to the Joe Biden effort to try to keep the economy going at this point. The other big number of the day, housing starts, comes in at 1,669,000 at an annual rate. That's much better than the forecast 1.56 million. And so it does suggest that the housing industry remains on fire. 5.8% gain there. Building permits go to 1.709 million. The forecast was for 1.608. So that's an increase of 4.5%. It does suggest real strength in the housing market. Mortgage rates still very, very low. The interest rate sensitive sectors of the economy are responding. And then the other number that is out this hour, Philadelphia Fed, a big increase. And, you know, in a strange way, this may be the one that the markets react to the most. 26.5.
I agree.
The last month was revised down to 9.1. So that's a major increase in the Philadelphia Fed index. The new orders index is at 30 versus 1.9. And the employment index rises to 22.5 versus 5.6. So on the one hand, you've got the reflection of a economy that is still shedding jobs in jobless claims, but the Philadelphia Fed index, granted it's a small area, but it does suggest that there is some comeback out there.
We'll get to Christine Lagarde in a moment. I know John Farrell can parse the slowdown in Europe versus what I see in this data, Michael McKee. I totally take your point on this fairly obscure idea of Philadelphia Fed. I want you to describe why guys like me turn right to Philadelphia Fed versus all the other stuff we talk about.
Well, it's a very contemporaneous index. It's a sentiment index. It's basically purchasing managers in the Philadelphia Federal Reserve District, New Jersey, Philadelphia area, and Delaware. And it does show some increased confidence. The interesting thing about this is it's not just manufacturers. They do include some service industries in there. So it is good news to see that rebound in that way. It isn't clear. I haven't had a chance to look through all the report on why they're seeing this rebound, but we are seeing a rebound there.
Mike, thank you. That's the wrap of the economic data. We can turn now to Frankfurt, Germany, to listen into a news conference with ECB President Christine Lagarde.
Confirm our previous baseline assessment of a pronounced near-term impact of the pandemic on the economy and a protracted weakness in inflation. In this environment, ample monetary stimulus remains essential to preserve favorable financing conditions over the pandemic period for all sectors of the economy. By helping to reduce uncertainty and bolster confidence, this will encourage consumer spending and business investment, underpinning economic activity and safeguarding medium-term price stability. Meanwhile, uncertainty remains high, including relating to the dynamics of the pandemic and the speed of vaccination campaigns. We will also continue to monitor development in the exchange rate with regard to their possible implications for the medium-term inflation outlook. We continue to stand ready to adjust all of our instruments, as appropriate, to ensure that inflation moves towards our aim in a sustained manner, in line with our commitment to symmetry. Against this background, we decided to reconfirm our very accommodative monetary policy stance. First, the Governing Council decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to but below 2% within our projection horizon. And such convergence has been consistently reflected in underlying inflation dynamics. Second, we will continue our purchases under the Pandemic Emergency Purchase Programme, PEP, with a total envelope of €1,850 billion. We will conduct net asset purchases under the PEP until at least the end of March 2022, and in any case, until the Governing Council judges that the coronavirus crisis phase is over. The purchases under the PEP will be conducted to preserve favorable financing conditions over the pandemic period. We will purchase flexibly according to market conditions and with a view to preventing a tightening of financing conditions that is inconsistent with countering the downward impact of the pandemic on the projected path of inflation. In addition, the flexibility of purchases over time across asset classes and among jurisdictions will continue to support the smooth transmission of monetary policy. If favorable financing conditions can be maintained with asset purchase flows that do not exhaust the envelope over the net purchase horizon of the PEP, the envelope need not be used in full. Equally, the envelope can be recalibrated if required to maintain favorable financing conditions to help counter the negative pandemic shock to the path of inflation. We will continue to reinvest the principal payments from maturing securities purchased under the PEP until at least the end of 2023. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance. Third, net purchases under our asset purchase program will continue at a monthly pace of €20 billion. We continue to expect monthly net asset purchases under the APP to run for as long as necessary to reinforce the accommodative impact of our policy rate and to end shortly before we start raising the key ECB interest rates. We also intend to continue in reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. Finally, we will continue to provide ample liquidity through our refinancing operations. In particular, our third series of targeted longer-term refinancing operations remains an attractive source of funding for banks, supporting bank lending to firms and households. Let me now explain our assessment in greater detail, starting with the economic analysis. Following a sharp contraction in the first half of 2020, Euro area real GDP rebounded strongly and rose by 12.4% quarter-on-quarter in the third quarter, although remaining well below pre-pandemic levels. Incoming economic data, surveys, and high-frequency indicators suggest that the resurgence of the pandemic and the associated intensification of containment measures have likely led to a decline in activity in the fourth quarter of 2020 and are also expected to weigh on activity in the first quarter of this year. In sum, this is broadly in line with the latest baseline of the December 2020 macroeconomic projections. Economic developments continue to be uneven across sectors, with the services sector being more adversely affected by the new restrictions and social interaction and mobility than the industrial sector. Although fiscal policy measures are continuing to support households and firms, consumers remain cautious in the light of the pandemic and its impact on employment and earnings. Moreover, weaker corporate balance sheets and uncertainty about the economic outlook are still weighing on business investment. Looking ahead, the rollout of vaccines, which started in late December, allows for greater confidence in the resolution of the health crisis. However, it will take time until widespread immunity is achieved, and further adverse developments related to the pandemic cannot be ruled out. Over the medium term, the recovery of the euro area economy should be supported by favorable financing conditions, an expansionary fiscal stance, and a recovery in demand as containment measures are lifted and uncertainty recedes. Overall, the risks surrounding the euro area growth outlook remain tilted to the downside, but less pronounced. The news about the prospects for the global economy, the agreement on future EU-UK relations, and the start of vaccination campaigns is encouraging. But the ongoing pandemic and its implications for economic and financial conditions continue to be sources of downside risks. Euro area annual inflation remained unchanged at -0.3% in December. On the basis of current energy price dynamics, headline inflation is likely to increase in the coming months, also supported by the end of the temporary VAT reduction in Germany. However, underlying price pressures are expected to remain subdued owing to weak demand, notably in the tourism and travel-related sectors, as well as to low wage pressures and the appreciation of the euro exchange rate. Once the impact of the pandemic fades, a recovery in demand, supported by accommodative fiscal and monetary policies, will put upward pressure on inflation over the medium term. Survey-based measures and market-based indicators of longer-term inflation expectations remain at low levels, although market-based indicators of inflation expectations have increased slightly. Turning to the monetary analysis, The annual growth rate of broad money, M3, increased to 11% in November 2020 from 10.5% in October, reflecting a continued increase in deposit holdings. Strong money growth continued to be supported by the ongoing asset purchases by the Eurosystem, which remain the largest source of money creation. In the context of a still heightened preference for liquidity in the money holding sector and a low opportunity cost of holding the most liquid forms of money, the narrow monetary aggregate M1 has remained the main contributor to broad money growth. Developments in loans to the private sector were characterized by moderate lending to non-financial corporations and resilient lending to households. The monthly lending flow to non-financial corporations remained very modest in November, continuing the pattern observed since the end of the summer. At the same time, the annual growth rate remained broadly unchanged at 6.9%, still reflecting the very strong increase in lending in the first half of the year. The annual growth rate of loans to households remained broadly stable at 3.1% in November, amid a sizable positive monthly flow. The new bank lending survey for the fourth quarter of 2020 reports a tightening of credit standards on loans to firms. This tightening was mainly driven by heightened risk perceptions among banks in a context of continued uncertainty about the economic recovery and concerns about borrower creditworthiness. Surveyed banks also reported a fall in loan demand from firms in the fourth quarter. The survey also indicated a further increase in net demand from households for loans for house purchase in the fourth quarter, even though credit standards continued to tighten. Overall, our policy measures, together with the measures adopted by national governments and other European institutions, remain essential to support bank lending conditions and access to financing, in particular for those most affected by the pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is necessary to support economic activity and the robust convergence of inflation to levels that are below but close to 2% over the medium term. Regarding fiscal policies, an ambitious and coordinated fiscal stance remains critical in view of the sharp contraction in the euro area economy. To this end, continued support from national fiscal policies is warranted given weak demand from firms and households relating to the worsening of the pandemic and the intensification of containment measures. At the same time, fiscal measures taken in response to the pandemic emergency should, as much as possible, remain targeted and temporary in nature. The three safety nets endorsed by the European Council for workers, businesses and governments provide important funding support. The Governing Council recognizes the key role of the Next Generation EU package and stresses the importance of it becoming operational without delay. It calls on member states to accelerate the ratification process, to finalize their recovery and resilience plans promptly, and to deploy the funds for productive public spending, accompanied by productivity-enhancing structural policies. This would allow the Next Generation EU program to contribute to a faster, stronger, and more uniform recovery, and would increase economic resilience and the growth potential of member states' economies, thereby supporting the effectiveness of monetary policy in the euro area. Such structural policies are particularly important in addressing long-standing structural and institutional weaknesses and in accelerating the green and digital transitions. We are now ready to take your questions, and I'm delighted to introduce our new Director of Communication, who many of you know, Wolfgang Krösel.
Thank you, Madame Lagarde. And the first question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much. President Lagarde, I have a question regarding the favorable financing conditions. You've been elaborating on the tightening of financial conditions in your bank lending survey. So how concerned are you about that tightening? And if that tightening were to continue, would that mean that the financing conditions are no longer favorable? My second question is on the economy and the renewed lockdowns in major economies in the Eurozone, whether this is affecting your economic outlook at all, because it doesn't really seem to in your text, and also how concerned are you about the creation of zombie companies in that context? Thank you.
Well, thank you so much. And you actually give me a chance to reverse the order of your questions, because I would like to address the second part of your question, which had to do with the economic outlook, because I think that it in a way determines what was decided today at our Monetary Policy Governing Council. And when we look at the current economic situation, we are clearly seeing mixed developments. And those mixed developments apply to countries, member states, that have been affected in different ways and to different degrees by the pandemic. So if I was to sort of put in two categories the developments that we are seeing, you have the positive development and the not so positive developments. And as part as the positive, I would certainly say, number one, the fact that the vaccination campaign has now started. Now, albeit with some difficulty to begin with, but it has now started. We have 2 vaccines approved and probably a third one to come, but that's a first positive. I would say my second next positive is that an agreement was found between the EU and Brexit. And that clearly has to be taken into account, given that our December projection, which was predicated on the same basis as the European Commission, assumed that there would be no agreement and that it would be a WTO blunt agreement. Third positive, the fact that European leaders have now reached complete agreement and removed the last hurdles to the next generation EU issuance at the EU level. And that really provides some certainty as to the fiscal stimulus that will be coming in the months and years to come. It's not completed, and clearly the ratification process has to be completed for the own resources to be made available and to therefore permit the joint borrowing by the member states, and then the RRP, the recovery and resilience plans, have to be submitted in due course as well. But it's a positive that has now been confirmed. I would list as part of the positives as well the fact that in the euro area, manufacturing is clearly on a recovery path, and when we look at the manufacturing PMI, it's clearly and for some of them extended, and the new variants from the UK, from South Africa, from Brazil could require some more stringent measures going forward. The incoming data suggests that activity likely declined in the fourth quarter 2020, which will have a bearing on the first quarter of 2021. And whether we look at mobility data, whether we look at service PMI, whether we look at retail sales, those are numbers that have declined in the last quarter of 2020. In that context, inflation numbers remain extremely weak. We know that the December number is -0.3. We also expect that the early numbers in 2021 will turn most likely positive for mechanical reasons that have to do with the German VAT rate, that have to do with the energy prices. But you know, domestic prices will continue to be subdued, owing to weak demand, owing to labor market slack, and the euro exchange rate appreciation. So that's the landscape against which we have decided, you know, to reconfirm the monetary policy decisions that was made in December, and we do that against a projection which was announced in December, which we will revisit for the next monetary policy meeting in March, but which we consider as still broadly valid on the basis of the pluses and minuses that I have mentioned before. But all of that is clearly tilted to the downside. We still have a lot of uncertainty about, you know, the current pandemic, about its development, about the lockdown measures, the containments, their length, and our forecast, our projection from December, which we believe is still valid, was predicated on lockdown measures continuing through the whole of the first quarter of 2021, and vaccination progressing very gradually. So these hypotheticals are being confirmed by what we see at the moment. But in the light of that, what we have decided is to reconfirm our December monetary policy decisions. And, you know, in doing so, it's a steady, very focused and very attentive to all development, and ready to adjust, if necessary, our pace of purchase. I'll come to that in a second, but also ready to adjust and use all the instruments that we have available in the toolbox. So that's our framework at the moment. And I'll now zoom into the question that you asked about favorable financing conditions, because this is clearly the compass that we want to use, that is clearly anchored onto inflation. And I'm just going to reread for you, because to me that's the key sentence, if you will, that some of you, I'm sure, have identified. We say, purchases under the PEP will be conducted to preserve favorable financing conditions over the pandemic period. So over the pandemic period is at least until the end of March 2022, or any such time when the Governing Council considers that the pandemic is to continue. And clearly that means that we will be present in the markets until the end of March 2022 at least. The second sentence matters enormously as well. It says we will purchase flexibly according to market conditions, with a view to preventing a tightening of financing conditions that is inconsistent with countering the downward impact of the pandemic on the projected path of inflation. So favorable financing conditions is the compass, but the anchor is clearly the projected path of inflation and the necessity to counter the downward path, the downward impact that pandemic has had on the inflation path. So how do we sort of identify whether or not we're in the presence of favorable financing conditions? Well, I would say, first of all, that it is based on a holistic and multifaceted approach assessment, and it is intended for all sectors. So all sectors means household, SMEs, corporates, sovereigns. And we look at the financing conditions, and as a result of that, we look at the banking lending rates, we look at the credit conditions, we look at the yields, yields of corporates, yields of sovereigns, and it's this composite approach and this multiple indicators approach that we take into account to determine whether the financing conditions are favorable or not. But don't forget that that favorability is always assessed relative to inflation dynamics. So we have to decide whether the financing conditions are appropriate to return inflation to its pre-pandemic path. So those are really, I like to think in terms of this compass and the anchor, and the two of them interact in order to assess whether or not we need to adjust and calibrate our purchases over any period. Because don't forget that PEP, as intended to preserve the financing conditions, is earmarked by flexibility. And that flexibility, you've heard me say before, it's flexibility along time sequences, flexibility in asset classes, flexibility in countries. And it has this dual function of stance and transmission as well. So all that remains unchanged, and the flexibility is still, you know, one of the key attributes of our PEP.
Thank you. The next question goes to Balazs Koranyi of Reuters. Balazs, please.
Good afternoon. Thanks for taking my question. Madam President, coming back to this point about preserving the current financing conditions, I'm curious about your commitment and how far it goes, because, you know, Italy went through some political drama last week, but there was little to no market reaction, which was quite surprising. But this, of course, was self-inflicted. It's a domestic issue and no connection to the pandemic. So why is the ECB supporting a market in such a case? And is this consistent with the parameters that you just set in the previous question? My second question relates to yield curve control. Pablo Hernandez de Cos, the president of the Bank of Spain, said this is something that the ECB should consider. What is your view of such a proposal? And what is your reply to analyst commentary that, in fact, the ECB is already doing de facto yield curve control without saying so? Thank you.
Thank you very much. Let me just again restate what we are doing, which by definition will tell you what we're not doing. Our aim is to preserve favorable financing conditions in the euro area. And we want to do that because we believe that it will support consumer spending, it will support investment spending, and ultimately it will help achieve our mandate of price stability. And as I said, our assessment of favorable financing conditions is not driven by any single indicator. It is a holistic approach. It takes into account multiple indicators, and, you know, bank lending is one, credit conditions is one, corporate yields is one, sovereign bond yields is one, and it's by combining all of those that we try to assess whether the financing conditions are favorable or not. Now, obviously, government bonds yields play an important benchmark role for the pricing of credit in the economy. But at the moment, we do not see that development in any particular yields pose an issue for euro area-wide financing conditions. And that really, I think my answer actually tackles your two questions. We're not riveted to any particular yield. We take into account multiple indicators that relate to the financing of the economy. And as I said, we believe that financing conditions are currently broadly favorable on the basis of that multifaceted, holistic assessment that we do of those very indicators that I have mentioned.
Thank you. The next question goes to Christian Siedenbiedel of Frankfurter Allgemeine Zeitung. Christian, please.
I have a question about Madame Lagarde. Many people are
Christian, it's impossible to understand you.
We can't hear you.
Okay.
Oh.
People are a little worried about what will happen to them with the digital euro. Can you encourage them? Why is the digital euro good for people like you and me?
I'm very sorry, but we lost half of your question. So I know it relates to the euro, and I know that it's about you and me, but anything else was lost in the conversation. So do you mind restating your question? We couldn't hear it.
Yes, I tried. Many people are a little worried about what will happen to them with the digital euro. Can you encourage them? Why is the digital euro good for people like you and me?
Thank you. You know, the word I was missing in your question was digital, which is clearly the critical one. Let me just preface what I will say now with the fact that if and when we have a digital euro, we will nonetheless always have banknotes. So I don't think that anybody should think in terms of banknotes and coins as opposed to and in substitution of digital euro. So the two will coexist and will continue to do so if and when there is a digital euro. And I just want to remind you where we are in that process. We have launched a consultation throughout Europe on the 12th of October, which expired on the 12th of January, to which we had over 8,000 responses by multiple respondents, which have all addressed at least two of the questions that were included in the questionnaire. So we have received a mine of information, which we are currently processing, which will give rise to a report that will be shared, that will be made public and available, because we want that process to be totally transparent. My colleague on the board, Fabio Panetta, has reported to the European Parliament on that particular matter, and he will report again, I'm sure, when we have conclusions from that report. And it is only in the spring, probably in April, that we will determine whether or not we decide to go ahead with the work that will need to be done. But there are lots of questions that have not been resolved and that will, when they are resolved, determine the shape, the technology support, the process by which the digital euro will be created. And I want to downplay any expectations that it is about to come. It will take a number of years. It is a complicated issue. It's one that has to be resolved without disrupting the current financial scene, nor jeopardizing the monetary policy transmission that we have currently. So, and we have not yet either decided what the technology backbone would be, ideally, in order to support that digital euro. But I would simply observe, in response to your question, that a digital currency, where it has been piloted, and there is only one which is clearly now launched in a very small country, but it is piloted on a fairly large scale in China, is of use and of service to all citizens. So it is not something that is good for the elite, or is good for the young, or is good for some versus others. If it is well done and if it is well implemented, it would be of service to all citizens. But clearly we are not there. There are lots of issues that need to be addressed. We need to make sure that that is compatible with monetary policy, with sovereignty, with proper transmission of monetary policy. So it's clearly a project that is fascinating for some, that corresponds to a demand from citizens. I'll remind you that there are several countries, including, for instance, Sweden, outside the euro area, granted, or the Netherlands, where the use of tangible currency is declining at a very, very fast pace. And that has been, as so many other things, that has been accelerated by the pandemic.
Thank you. The next question goes to Carolyn Look of Bloomberg News. Carolyn, please.
Hi, thank you very much. President Lagarde, as you mentioned in your introductory statement just now, the latest bank lending survey suggested that credit standards tightened for loans to enterprises and households. Now, we're seeing that we have these extended lockdowns and very slow start to vaccinations. And a key risk for the euro area is actually a wave of defaults hitting banks. So how is the ECB thinking about this with regard to the effectiveness of its TLTRO program, given that these are supposed to encourage banks to lend, and at the same time that lending can expose them to bigger risks? And secondly, the account from your last meeting also showed that some reservations were expressed about how much the TLTRO borrowing allowance should be increased. So can you give us an idea of what the Governing Council's latest thinking is on what limitations exist as to how much policy can or should be eased via TLTROs, and whether there's any concerns about being seen as excessively subsidizing the banking system?
Thank you for your question on TLTRO. Essentially, let me remind you what TLTRO is. TLTRO 3 is intended for. It is intended to continue to support the financing of the economy and the fueling of credit throughout all segments of the economy, and in particular, of course, the non-financial corporate sector. But it includes also, multiple segments of lending. So it was constructed with a view to making financing available at sufficiently attractive conditions that banks would be actually encouraged to respond to the demand that they would be getting from their clients, essentially. And when you look at the numbers of the second quarter, and particularly the second TLTRO 3, and the take-up that we had at that time, which exceeded by far all the expectations, and even the following TLTRO that was also in excess of what the forecast expected, it is clear that it has encouraged lending by banks. And when they are consulted, actually, when you look at the BLS, the bank lending survey, this one and the previous one, all banks actually say, well, all banks, those that are surveyed, actually say generally that TLTRO has actually helped them and encouraged them to provide lending to the economy. Now, clearly, at the same time, banks have to be mindful of the economic circumstances. Banks have to be mindful of the particular situation of their respective clients. They have to appreciate what kind of moratoria will apply, what kind of guarantees there will be, and they need to do their risk assessment, as they were reminded by the supervisory side of the ECB most recently. So it's with that background that lending is available, but clearly to be used under the responsibility of the banks that have to continue to do their proper risk assessment in view of the financial stability risks that are out there. Now, we had a good discussion about the expansion and extension, if you will, of TLTRO at our December meeting, and we came to the conclusion that it should be extended over time, that we should have 3 new issuance, and that the volume that banks could be allowed to borrow against would be moved from 50 to 55. And that's how we are proceeding. We are reconfirming those decisions, and we continue to remain obviously very attentive to the actual lending. We observe, by the way, that the lending rates are at lowest levels they've ever been, or pretty much that 1.5% for corporates, 1.35% for households. It's really favorable financing conditions by all accounts, and certainly TLTRO has contributed to that as well.
Thank you. The next question goes to Martin Arnold of the Financial Times. Martin, please. Martin, are you connected?
Commission's compass onto inflation and how it can be used in order to counter the negative impact that pandemic has had on our inflation path. So it's pretty clear what we want to achieve and how we will define those favorable financing conditions. But we will be assessing that on a regular basis, and clearly there will be yet another assessment that will take place in March, and obviously at the time when new projections will be available. So the anchor of inflation and how it impacts on the compass of the financing conditions will be even more explicit.
Thank you. Next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please, over to you.
Yes, hello. Thank you very much for the opportunity. President Lagarde, I have two questions. The first question is on the PEP envelope. In you clear that the envelope is not to be used in full, but it can also be recalibrated. Now, the fact that it cannot be used in full comes first. And I don't know, I see maybe a sign a bit hawkish. I could be mistaken, but can you specify why you included this sentence on the envelope? And I have also a second question on preserving the favorable financing conditions. And this is on the banks and on the fragmentation that there can be this year with the rise of non-performing loans, how the Governing Council is concerned about it, if it is concerned about fragmentation. Thank you.
Well, thank you very much. I'm going to go back to that same sentence, which, it's, as you can imagine, it has been very carefully drafted and elaborated. And there's one word that I would call your attention to, and it is the word equally. So that sentence, which is following the one that I read earlier, so I will not impose yet another reading, although I love to read. But this one says, if favorable financing conditions can be maintained with asset purchase flows that do not exhaust the envelope of the net purchase horizon of the PEP, the envelope need not be used in full. Full stop. And that word's important. Equally, so what we signal with equally is it's a balancing act. If, and I'll read the sentence, equally, the envelope can be recalibrated if required to maintain favorable financing conditions to help counter the negative pandemic shock to the path of inflation. So, I think it goes, I don't need to re-explain yet again. As I said, our compass, the driving force is the favorable financing conditions. The anchor is the countering the downward impact on inflation, on our inflation path, the downward impact of the pandemic on inflation path. And if we determine that the financing conditions are favorable, then we adjust. If, on the other hand, favorable financing conditions cannot be preserved as the pace of purchase has been decided, we will adjust upward. And if the envelope is not sufficient, then we will recalibrate the entire envelope. So I can't be clearer than that. It's really identified with a very high degree of flexibility and the capacity to adjust, because we are prepared to adjust all our instruments, not just the pace of purchase. We're prepared to adjust all instruments. Nothing is off the table. Nothing is off the table. You had a second question, which I've lost. Now, here we go. Bank fragmentation. Our mandate is price stability in the euro area. So when I hear the word fragmentation, I think about monetary transmission throughout the whole of the euro area, throughout the member states. And that is also a key function. It's one of the two functions of PEP in particular under the extraordinary circumstances that we are going through. Non-performing loans, this is a matter that clearly belongs to the supervisory arm of the ECB, and as you know, Andrea Enria has been very explicit about non-performing loans. He's been very explicit about what the banks should do in order to recognize non-performing loans. He's been very explicit as well about the asset management companies or company, whether it's a combination of national levels and a holding at the European level or a European entity, and I will not venture in that particular field because it belongs to the supervisory side. And as you know, we have a division of labor here at the ECB.
Thank you. The next question goes to Andres Stumpf of Expansión in Spain. Andres, please.
Good afternoon, Madame Lagarde. I wanted to know if you see the strengthening of the euro more or less of a threat that it was on December. And a second question, I was wondering if you could give market participants any advice on how to know whether the ECB is going to use the full PEP envelope or not, as I see this holistic and multi-faceted approach a bit confusing. Thank you very much.
Well, I'm really sorry that you see it as confusing because it's not intended to be confusing. So let me restate again. We have an envelope of 1,850 billion euros that is available, that can be used flexibly depending on whether or not we reach our objective of preserving favorable financing conditions. If we don't need to use the whole envelope because the financing conditions will have remained favorable nonetheless, we will not use the entire envelope. If, on the other hand, we need more than the envelope because the financing conditions have not been favorable and preserved as such, then the envelope will be reconsidered and recalibrated. So flexibility is the key word. The other point that I made earlier on is that we have not only expanded PEP back in December, we have extended PEP over the course of time. So until March 2022, you can expect the ECB to be present in the market. And, you know, it is not going to be linear. It is not going to be a fixed amount. So yes, we will have to look carefully at the financing conditions, and those people in the market understand as well when and how financing conditions can evolve and change. So it's fairly, it's not as simplistic as the linear fixed amount, but it's also driven by the fact that we want to be able to maintain favorable financing conditions, because we believe that this will actually induce consumers to spend, investors to invest, and ultimately economy to fare better and inflation to go up towards our aim, therefore helping us deliver on our mandate of price stability. So I hope to have clarified a little bit for you what you felt was confusing, and I hope to have removed a bit of that confusion. On the strength of the euro, let me just tell you that we are monitoring very carefully exchange rates, very carefully, because we know that exchange rate have an impact on prices and clearly play a part in our inflation forecast and what we can deliver with our monetary policy. So we are very attentive, and as I said earlier on, all instruments can be adjusted and nothing is off the table.
Thank you. And the last question goes to Tom Fairless of the Wall Street Journal. Tom, please.
Hi, thanks very much for taking the question, President Lagarde. The first question was on the how you see the outlook for the first quarter of this year. Are you currently, given the social restrictions, it seems quite clear are going to last until Easter in a lot of countries, are you expecting a contraction? I mean, how big do you expect the impact of these social restrictions to be? The second question, I'm sorry to press this point again, but it was about this 1.85 trillion And the fact that you said in the opening statement, I see that it's an even-handed statement, but the fact that you mentioned specifically that you might not use it all suggests there was some kind of discussion about that. I mean, was there a feeling within the Governing Council that you were tilting one way or the other, that actually you might not need to use the whole package because you're cautiously optimistic, for instance? Thank you.
Well, thank you. I wish I was cautiously optimistic. I think I'm now getting old enough to be realistic and to observe the development of a situation which is really hard to predict and really hard to forecast. I think what we are observing on a preliminary basis, because this will really be the subject of our March next Monetary Policy Governing Council meeting. But what we're observing is a decline in growth in Q4. And as we all know, when you have a decline in Q4, when you have negative numbers we will see, but decline in Q4 will travel into Q1 and will also impact the economic outcome for Q1. Added to which, as you said, there are more containment measures, there are intensification of lockdowns. Now, lucky or not, but we had anticipated the continuation and the lockdown measures that are currently in place, not to the curfew hour, if you will, but certainly it was included in our forecast, and that leads us to conclude that our forecast for 2021, around 4%, 3.9 if I recall, is still broadly valid at this point in time. But short-term risk tilted to the downside as well, no question about it, uncertainty in the air. So we shall see, but we don't have enough clear hard numbers yet to revise in any way. All I can tell you is that our forecast for 2021 is still holding as we speak. I hate to read yet again, so I won't do it. Fear of being accused of reading so much. But as we have discussed in December, we have expanded the volume of PEP from 1.3 to 1.850. We have extended the duration because we believe that because of the contagion current developments, because of the containment measures, we believe that an extended period of time is warranted. And we have associated those two measures, expansion and extension, with a variable which is favorable financing conditions. This is what we strongly believe in. And we have hope that favorable financing conditions will continue and will be sustainable going forward. But we have to be prepared for all options, as a result of which we have identified that envelope, which is either not going to have to be used if we meet the requirement of the favorable financing conditions, or which will have to be increased, recalibrated, if more is needed in order to respond to this expectation of the favorable financing conditions. I can't tell you more than that. It's a package. It came together with TLTROs, which was also increased in volumes and extended over time. It comes on the back of very low interest rates. So it's a whole package which, if coupled with our forward guidance, which is also very explicit, forms our monetary policy at this point in time.
Thank you. I think that concludes our press conference. See you around next time. Thank you very much.
Thank you. All the best to you, and look after yourself.
Chairman Greenspan is somewhere smiling if he's watched some of this. For our audience worldwide, this is the countdown to the Open. We're through the opening bell. Let's get you some price action, shall we, very quickly, and start with the euro. Euro dollar at around about 121. Not much price action, much movement off the back of all of this. 121.46, up a third of 1%. In the Italian bond market, yields a little bit higher, up about 2 basis points on a 10-year to about 64 basis points. And to round things out into the equity market we go, up about a tenth of 1% on the S&P 500. The NASDAQ up by 1/3. More all-time highs in a US session about 3 minutes into the open in the United States. For President Lagarde, the outlook determined not by what she does, by what happens with the vaccinations. Take a listen to what she had to say.
Significant, I think, sort of policy focus is going to be on Biden's 100 days.
How effectively he is able to bridge some of these divides.
In the near term.
If Biden is able to get, another $1,400 of checks and unemployment insurance boosted and extended.
That clearly wasn't President Lagarde. Let's turn now to Michael McKee to get you up to speed on what happened in the last hour. Mike, I didn't learn a lot, I've got to say, in that news conference.
I'm not President Lagarde either, because you might be able to understand what I was saying. Investors having a tough time, John, with her press conference, because she sort of wanted to deliver a message that not much has changed, even though a lot is changing. And that was a bit confusing. We have seen a little movement in the markets for the euro, for the Italian 10-year, but not a whole lot. The ECB president came out and said, we're having a recession in the fourth quarter. We had a recession in the fourth quarter, but risks are to the downside in the first quarter, although there are some positive developments. And our December forecast is at risk, but it's still likely to be in play. We could increase the PEP financing, 1.85 billion euros, but we probably don't have to. We could front load it, but we probably don't have to at this point. And about the only thing that she said that was certain was the ECB will be in the markets until 2023. The rest of it is kind of, basically, I think, John, what she was saying is we don't know. And so we're going to wait and see, and it's kind of hard to give you some definitive answers.
It took a long while, Mike, to say that we don't know. I think as you and I discussed a little bit earlier this morning, Mike, this outlook is not determined by what they do anymore. This isn't even about fiscal policy right now. This is about a vaccination effort in Germany and elsewhere lagging big time with a huge stumble out of the gate. And I guess, Mike, how quickly they can turn that around will determine the fate of this economy through the rest of 2021.
Well, it's the same in every country around the world, but yes, the Europeans have stumbled out of the gate, and particularly in the big economies like Germany and France. And so she said that, yes, good news is that we have a vaccine, but it's got to be distributed. It's got to get out there. Also in the good news category, she put the end of Brexit, which a lot of people, I'm sure, are pretty happy about, although you got to live with the results for a while. And then she also said the end of confusion about what's going to happen in the U.S. is good news. But she kept coming back to the idea that more needs to be done in the ECB area, in the euro area, until we know that we've reached some sort of herd immunity. And she again put in a pitch for fiscal help, saying that stimulus is still needed because we don't know how long this is going to take.
My thank you. About 6-7 minutes into the session, up 1/10% stateside on the S&P 500, on the Nasdaq. Another record high, up 1/3%. Joining us now from Invesco, Alessio De Longis. Alessio, let's just get up to speed quickly. Your reaction to that news conference in the last hour or so.
Well, it was a rather uneventful meeting on the surface, as we expected, given the large policy package update that we received in December. But I find it interesting, to be honest, that there was so much emphasis today in the Q&A session on financial conditions. And also what I find very interesting is that she specifically listed some of the indicators, the collection of indicators that goes into their assessment. And the usual suspects are there, of course: money supply, money growth, credit growth, lending, but also specifically credit spreads, the level of credit yields, of corporate bond yields, the level of sovereign yields, and associating their assessment of financing conditions almost to another whatever it takes moment, in my opinion, because specifically linking their assessment of financial conditions to market variables, as a market participant, I read that as effectively a way of targeting asset prices without really telling us which ones in particular and what level it is. But in my opinion, was a bit of another whatever it takes moment underneath the surface.
So Alessio, let me jump in. How do you navigate that as a market participant then, when the inflation mandate of the ECB is seemingly just taken a back seat because they're not going to achieve it through the forecastable horizon? over at the ECB, and it just seems to be about financial conditions, that they'll just sit on the bid whenever spreads start to blow out. What do you do?
Well, again, depending on your investment beliefs and your investment process, but we personally subscribe to the idea you don't stand in front of a central bank. You don't fight a central bank. Now, that still means that in the near term, you can get spreads to blow out or to widen, bond yields to rise. I think a certain well-behaved rise in bond yields and rising credit spreads is actually welcomed to create a little bit more of that flow. You need to stick to your plan, compare it to your investment process, and incorporate the meaningful template of monetary policy intervention that there is. So I think, given that we believe we still are in that recovery regime where the business cycle has just started, although in Europe, obviously, we're going through some double-dip recessions, in my opinion, the template here remains one of buying the dips, basically believing that the central bank is there to support that buying the dip behavior in the marketplace.
Alessia, with that in mind, why do you think people still feel uncomfortable carrying large risk exposure? It felt uncomfortable through last year for really good reasons. Coming into this year, valuations extended. We're having a conversation about bubbles at the very beginning of a recovery. That's unique, that's unusual. Can you walk me through why it's still uncomfortable to carry that huge risk exposure into 21?
I think you're really raising a absolutely critical question. And it's really about the paradigm with which we look at markets. Because if we look at let's look at equity markets from an absolute perspective, an absolute level perspective, just breaching all-time highs every day, making new highs at the very beginning of a recovery. And let's not forget, a sell-off in equity markets that lasted just 4 weeks for the biggest recession in our generation and beyond, frankly, in a century, it does seem odd. However, if you look at the performance of all asset classes on a relative basis, where global bond yields are, not only policy yields, medium-term bond yields, but also long-term bond yields, one can easily, from a valuation perspective, justify the incredible rise in equity markets through the fall in the discount rate. So the key question, so we are comfortable taking risk because, under the assumption that from this point on, you begin to see improving cash flows, improving earnings growth that will be accompanied by a gradual rise in bond yields. But basically, the combination of the two will still make sense from a valuation standpoint in the way the numerator and the denominator of valuations, cash flows and dividend discount rates, combined together. Obviously, that's critical at this point on the vaccine rollout and the ability of pent-up demand to really come back.
Alessio, great to catch up, sir. Good to hear from you. It's been too long. Alessio de Longis there of Invesco. An equity market that turns a little bit lower in the last couple of minutes. Sessions young this Thursday morning. We're down about 0.1%, unchanged on the NASDAQ. With your movers is Sarah Ponzek. Hey, Sarah.
Hey, John. Well, earnings season is now in full swing, so I'll run you through a few of the standouts this morning. Kicking it off with United Airlines. The company did report earnings yesterday after the bell, reporting an adjusted loss per share of $7. That was greater than the expected loss of $6.65. They also said they expect first quarter operating revenue to fall as much as 70%. There you see United Airlines down 5% this morning. Fuel Cell Energy. This is a company that's been up 480% over the last year, already up about 50% this year. Reported earnings this morning, a loss per share that was also greater than estimates at 8 cents. Union Pacific also reported earnings this morning, posted its most efficient quarter ever. However, in the call, management has given it a bit of a more tepid outlook, and we did see shares turn lower after trading higher in the pre-market. And last but not least, Travelers, the insurance company, did see improvements in underwriting, investments, reserving, boosting its earnings per share above the highest of analyst outlooks. But moving on to companies that are moving more so on analyst calls this morning. PayPal, for example, upgraded at BTIG to a buy. They said that cryptocurrencies could add $1 billion to annual revenue by 2022. PayPal, I guess about flat now this morning. Moving on, though, to Google parent Alphabet. Piper Sandler initiated coverage with an overweight recommendation. And then General Motors and Ford. We've seen some talk and actual investment into the tech space, autonomous cars, and we see General Motors and Ford also pushing higher this morning, John.
Thanks, Sarah. Thanks very much. Coming up on this program, we'll head down to Washington and get you the latest from the Biden administration and reaction from Steve Whiting of Citi. All of that up next right here on Bloomberg. This is Bloomberg TV.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Significant, I think, sort of policy focus is going to be on Biden's 100 days.
How effectively he is able to bridge some of these divides.
In the near term.
If Biden is able to get, another $1,400 of checks and unemployment insurance boosted and extended.
That's, significant. The market is thrilled about the near term.
The stimulus will be very welcome and will continue to propel the growth story that we've been seeing in markets.
That is a lot of money in people's pockets.
It's a staggering amount of liquidity for this market.
With the Biden administration and the proposal.
The stimulus in the economy should be very effective.
25% of annual U.S. GDP.
We have an expectation of GDP growth to reach levels that we haven't seen since 2005.
That's the outlook down in Washington, D.C., the view from Wall Street. Joining us now from Washington, Emily Wilkins, and on the market action, Kaylee Lyons. Emily, let's come to you straight away down in D.C., already hitting the ground running. What is this administration already trying to do?
Well, we're going to hear later from the Biden administration about the COVID-19 and how the Biden administration will be addressing that. President Biden will be making remarks. He will then go ahead and sign 10 executive orders implementing a variety of items dealing with COVID-19. Those include requiring people to wear masks in airports, making sure those coming to the U.S. have a negative COVID test, and also beginning groups to look into expanding the amount of testing and potentially beginning to reopen schools.
Emily, you've got to leave it there. Sure, I know. We'll catch up tomorrow. Emily Wilkins down in Washington, D.C. Kaylee, just on the price action for the markets, renewed confidence in the outlook, perhaps underpinned, reinforced by an incoming administration that's doubling down on the effort. Your take?
Yeah, John, this market greeted the new president with record highs, maybe relief that a peaceful transfer of power did indeed happen, but really a renewed focus on the prospects of stimulus and his plans for getting this pandemic under control. The S&P 500 posted its best first-day reaction to an inauguration since at least 1987. It's roughly flat on the day now, still up, though, by more than 2.5% year to date. Your outperformance, though, of course, coming from the reflation trade. The Russell 2000 up about 9% on the year thus far. Cyclicality really benefiting from President Biden, the anticipation of his administration, but other areas of the market as well. If you take a look at some ETFs that track solar, green energy, for example, or even pot stocks, they all have rallied dramatically over the past 6 months. That isn't true for all areas of the market, John. Of course, that renewed focus President Biden is putting on the pandemic, he's starting to weigh at the stay-at-home trade a touch. You can see sectors like cable and satellite are actually lower so far this year, as are things like home products and defense spending, John. Maybe not as in favor of a democratically controlled government as a Republican-controlled one. So defense stocks are down on the year thus far, though, John. Of course, the market pretty optimistic, though, on the broader recovery at this point.
Kelly Lyons, thank you. Kelly, thank you very much. Steve Whiting of Citi joining us now. Steve, let's just start with this market. I think the big challenge for everyone last year was trying to understand when they should re-risk, and many people were late doing that, and it felt uncomfortable doing so. This year, the challenge seems to be, should I de-risk, given the gains already in the tank coming through late last year into early this year? What's the advice you give to them right now, Steve?
Well, look, I think it's going to stay uncomfortable. And one thing to remember is there's always tomorrow. And when you think about what happened in 2008 and 2009, we had a 35% return in 2009. People thought that the cyclical recovery was completely priced in. And yes, certain elements of the cyclical recovery that would come in 2010 were over. But we then went on to positive returns in 9 of the next 11 years. Now, I think we have to start to assess that there are mature parts of this rally. You mentioned U.S. small caps up 9% for the year. They're up 78% since April, right? So there are some areas that are legitimately having euphoria for good reason. We will have a strong economic recovery with this much stimulus and a very temporary shock that was COVID. But we have to, again, start to acknowledge and start to be a little bit more discriminating beneath the surface as to those recovery trades and those sort of plain ordinary things that are hiding in plain sight that are good investments with good returns that are not really as distorted by this whole shock and mess we've been in.
Steve, it's honest of you to say that it is uncomfortable right now, because it certainly is uncomfortable. It was uncomfortable last year when the economy was falling out of bed and markets kept going higher. Uncomfortable, as I said earlier on this program, for many people right now, so early in the recovery, to see valuations as extended as they are in concentrated parts of the market. I know. One thing that I've been trying to just chip away at in the last couple of days, Steve, is whether anyone's willing to make a cycle call at this point, whether if it was big tech in the previous bull market, where the winner comes from this time around. Is it in the same place? Steve, what does that conversation with your clients sound like at the moment?
You know, I think this is a very different environment than where we were in 2000 through 2002, where technology took a fundamental drop. Apps, digitization, digital assets, software, all of these are going up as a share of the economy. Now, they may have been overbought. There are certain things that were unique to COVID. They moved up in valuation. They were particularly useful during this whole mess. But after that's over, I think we're going to go back and find that a good piece of that is still outperforming the economy. So when these distortions are over, we're going to go back there. But I do think that the other things have just been completely left behind. The fact that the most durable growth industry, it's a lot more boring, but the one that outperforms and gains share of the economy over time most consistently is one of the cheapest valuations, relatively speaking, and that's healthcare, global healthcare.
Don't bet against science has been a lesson that a lot of people have had to learn over the last 6 months or so. Steve, appreciate your time. I owe you an extra 5 minutes. Christine Lagarde owes it to you, but I'll write the check, okay? You come back soon and we'll catch up and have a longer conversation. Steve Whiting there of Citi. Thank you, sir. In the equity market, about 23 minutes into the session, equities turn lower just a little bit on the S&P 500. Let's call it flat. On the NASDAQ, we had some weight to all-time highs, up another 0.2%. Up next, your trading diary. The view on Washington, D.C. is going to be a big focus on this program in the months to come. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Just sitting in and around all-time highs on the S&P 500, basically unchanged on the session. Bottom of the pile, energy. Top of the pile, communication services, advancing there by about 0.7%. That's the price action in the equity market. Record high after record high on the S&P, the Nasdaq, the Russell, and for global equities as well. Here's the look ahead to the rest of today. House Speaker Nancy Pelosi holding her weekly news conference at 10:45 Eastern. At 2 p.m., President Joe Biden delivering remarks on his administration plan to fight the pandemic. The White House press briefing coming up at 4 p.m. I understand Dr. Fauci will be attending that as well. Plus earnings from Intel and IBM after the closing bell. On to Friday, we get market PMIs from the United States and the Eurozone to close out the week. And already a conversation about the US hitting the ground running and Europe struggling as we open the gates to 2021. For our audience worldwide, this was the countdown to the open. Thank you for being with us. I'm Jonathan Ferro. Catch me on Twitter at FerroTV. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty
Events
side.
for us in DC today is our senior reporter Catherine Norris.
With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after
Give us a bit
Hurricane
more
Katrina.
details about those executive orders.
Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise.
Joe Biden has
But as Anderson
really
finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated.
Trump legacy, so he's frozen work.
I'm working on the devastated side.
U.S.-Mexico border wall. He has cancelled the so-called Muslim travel ban on people traveling into the U.S. from predominantly Muslim countries. He's also rejoining the Paris Climate Accord and freezing plans, halting plans for the U.S. to leave the World Health Organization. So really sending a signal that he intends to act quickly. Now, some critics on the Republican side have said, this is at odds with Joe Biden's speech on Inauguration Day, in which he was calling for unity to reach out across the aisle, saying, this isn't the way to get unity, to act so offensively and so decisively. But Joe Biden and his team say they have no time to wait and that these were key campaign promises.
And Catherine, tell us a bit more about what we should expect from Biden and his team in the first 100 days.
Yeah, the real
first stop was the
focus
home
now
of an
going
82-year-old
forward
blind
is
Vietnam veteran.
coronavirus,
His roof
tackling
was
this
blown off by the
pandemic in
storm,
the
and
US,
he's been
which has
living
now
alone in a back
killed
shed
more
for
than
nearly 2 months.
400,000
His cane actually got broken in the
Americans.
storm.
So today, Joe
limited
Biden and
mobility.
his team are set to
He
publish
has a
a
number of medical
21-page
ailments. Dr. Preacher's
strategy
having a look at
on
him.
tackling coronavirus, and he wants to
Called
spend
the VA. They're going to get him set up for what he needs and stabilized so he can then be transported either to an evacuation center or off the island.
A huge amount of money. They're going to be looking
It's
at
when the chain gets
speeding up
broken, when those
vaccination,
families that are
although they
connected
say
to them
the
leave the
state of
island
that
or
campaign
take off. These
has
guys
been
get left at
in
the
a
end of the
mess
road.
by
And,
the Trump
it's tough.
administration. Some states, such as New York and California, saying they could actually run out
FEMA
of
was not
doses
officially
of the
part of Robert's
vaccine
team, and their
as
arrival
early
caught
as
everyone by
this
surprise.
weekend. There are also said to be shortfalls
Their job
in
here was to
masks,
survey and report back to
PPE
their
equipment,
superiors,
and even the
and did not
swabs
come
used
with
to do
medical aid
testing.
of
So
any
all
kind.
that has to be
People
scaled
think
up, the
that
Biden
FEMA is there
administration
to
says.
hand
They're
out
even
bottles of
going
water.
to
It's
be
not what they
invoking
do.
the Defense
FEMA has a role to
Protection
play. They have a very
Act,
specific role.
which is a
They
law that
bring
dates
in
back
ships,
to the
they bring in
Korean
airplanes,
War
they
in the
bring in tractor trailers
1950s
with
to
pallets
try
of
and
things.
ramp up the
But they're a big
production of
machine.
those supplies. So
And
really
there's
this is
gaps in
going
that
to be
thing.
the
And
big
you're seeing one
focus
of the
from
gaps
the new
here.
Biden
And we
administration
help fill
on
that
this
role.
first full day in office.
All right, Catherine Norris-Trent, our senior reporter there for us on the very first full day of Biden's presidency. Thank you very much indeed. She was talking a bit there about the domestic priorities of Joe Biden.
Fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
You know, insofar as
the machine.
nothing wrong being.
I'm lucky enough to be able to communicate with folks in FEMA,
can tell you is
the
that,
state of Puerto Rico.
I think that it's
For a
very,
ghost,
very important.
Robert
for,
makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage
it's important to stick up here
and delivered them to FEMA HQ free of charge.
Traditions.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
You know, you come into
We're able
politics
to
often with
resolve
very different
problems at a different
perspectives
level.
than some of the other world leaders that you work with. I mean, that's obvious. But our job
Our
has
next
always
stop
been to
was on a
make it
mountaintop,
work, our
a family of
relationships on
11,
behalf of our
struggling to
countries.
care for their
It's
special
obviously a
needs
lot
brother
easier
and what
to
was
do
left
that
of their
when you have a
house.
few more shared values.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed.
We have to remain vigilant for the next couple of days, I'm afraid. The rain is still coming down on the upper highlands and the water levels will still come down into the towns and cities over time. So we as the environment agency are encouraging everybody to sign up to flood warnings. Use our website and we can keep people alert of where the river levels are and what the latest information is so that they can keep themselves.
And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens.
Hello. Storm Christoph is clearing away, but it's not complete.
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen that shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings there.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
that moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say, 24 people went for the job. 23 people were accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们差。我们在座的所有人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma. But Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission.
And several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out, Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
like an addiction. You've got to make something. You have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle, and it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes. You can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
Maybe not specifically, I'm going to ask you about and say, oh, tell me about Morgan Sanson, Max. With the likes of Conor Harahan maybe out on the way out.